Thank you all for coming. Very distinguished guests, ladies and gentlemen. Good morning once again and welcome to the Business Day Insurance Conference. Our theme today focuses on resilience and growth in uncertainty, charting the path for Nigeria's insurance industry. When we take a look at the facts and the figures, we recognize that Nigeria's insurance industry is witnessing a significant moment with massive prospects for growth despite prevailing challenges and market uncertainties. Now, the market projections are estimating a value of $7.84 billion by 2025, and this is driven in large part by the life insurance segment, which alone is expected to reach $4.68 billion. And we cannot afford to overlook the immense potential that this presents for us. But there's an urgent need for innovative strategies to increase market penetration and customer engagement, especially in countries like Nigeria, where despite the tenacious approach adopted by insurance companies, some still see it as an alien concept. We'll still see a lot of people saying, God is my insurance, almost as if it's a taboo. Now, this conference is aimed to address some of the most pressing issues that we are facing, and we want to find out some of the best possible solutions to make this industry not just a thriving one, but one which promises national economic stability. And that's why you all are here today, stakeholders in the industry, CEOs, insurance practitioners, to focus on this conversation and just for us to chart out a relevant path. And once again, I'd like to welcome you all. My name is Elizabeth Musa. I'm a broadcast journalist, and for this occasion, I'll be your MC. Thank you all for coming. A round of applause for yourselves, please. Without taking any more of our time, I'd like to welcome for the welcome address the editor of Business Day, Mr. Tayo Fagbole. Please put your hands together for him as it comes up. Thank you.
Thank you very much, Elizabeth. Good morning, everyone, and you're all welcome to our insurance conference. I want to thank you all for being on time and for looking your best. My job is very simple, and I'll keep it straight and simple to the point so that you can listen to the experts. Looking forward to, as Elizabeth said, an industry that holds a lot of promise. I mean, in other climes, insurance normally is the largest financial sector, but in our case, it's the reverse. But obviously, which means there's a lot of room for growth. How much room do we have? It's said that penetration of insurance in Nigeria is just 1%, of the GDP per capita. But now, imagine that if it grows, if it increased by just 1%, Nigeria's economy would unlock about 1.5 billion in additional economic value. So for every 1% that's unlocked in insurance, it's an additional 1.5 billion, and you can imagine if that compounds. For an economy that also is turning the corner, obviously, with new businesses rethinking investments in Nigeria, taking more risk, it means you also need to take insurance. So obviously the opportunities are there, not just the typical ones, life, your car insurance, but also a change of mindset. And of course that we have in Nigeria, you unlock a lot of opportunity. So that's why we're here today, to see how we can make a dent in that additional 1%. And you have all the people in the room that can make this happen, who are making it happen, who are here interested in making it happen. At Business Day, we are proud to convene this platform, and we are also hoping that the ideas that will be generated today will lead to policies, partnerships, and above all, products. Because at the end of the day, those products are the ones that will unlock the value that has been identified. We extend our deepest appreciations to our partners, because without them, it can't happen. Our sponsors, who have made today possible, and also for everyone here, because your presence says insurance matters. So let's build that industry, let's unlock that value. I welcome you all, and I look forward to a rewarding afternoon. Thank you very much.
Thank you very much to the editor of Business Day, Mr. Tayo Fagbole. Can we make the applause louder, please? Once again, we'd like to recognize our sponsors for today. Without them, this would not be possible. We'd like to recognize Nor Takaful. We'd also like to recognize Sunu Assurances. We'd like to recognize MyCover.ai, Stren and Blan LP, Stanbic IPTC Insurance Limited, Leadway, and of course, First Insurance Brokers. Thank you all for making this happen for us. Thank you. And as we proceed in the agenda today, I'd like to make welcome for the Goodwill message, the special guest of honor, Olusegun Ayo Omoseyin, is the Commissioner for Insurance and the CEO of the National Insurance Commission. But he's being represented today by Mr. Ekerete Olagam Ikon, the Deputy Commissioner for Insurance, Finance, and Administration. Please make him feel welcome as he comes up. Thank you very much. All right. Thank you so much, sir. Thank you very much.
Thank you. I was hoping you would get my name wrong so that I will find you like I do most of the time, you know. Good morning, everyone, and I'm happy to be here. I'm here to represent the Commissioner for Insurance and the CEO of National Insurance Commission, Mr. Omoseyin. I have to emphasize that I am not Olusegun Ayo Omoseyin, so that you guys will not say, it looks different. But let me say, because we are all in this together, so you permit me to say a few things before I read his address. And those few things are part of the discussion that we will have today. One, I would like to ask, so what's the hashtag for this event? Business Day. So what's the hashtag for this event? Okay, it doesn't sound like there is one, so I'll give you one. So let's just do hashtag MIWIN. Hashtag MIWIN. My win. And what does that mean? Making insurance work in Nigeria. Please clap for yourselves. Clap for yourselves. You know, we have to make this work. Nobody will do it for us. So I'm happy to see all of us looking wonderful, beautiful, in a fantastic environment, and we should keep it up. And let me also very quickly say that a few of us are doing a lot of work to make this industry work. And I'm happy to see some of those people in this room today, you know. But a lot more of us need to do the work to make it work. So the insurance industry is the biggest industry in Nigeria. Yes, I heard when the editor said insurance is not as big as it is elsewhere in the world. That's a misconception. The insurance industry is the biggest. Why do I say that? By the time we begin to hear from the keynote address and other conversations, we'll discover it, we'll find out, we'll appreciate it. So how it works is that we secure all of the businesses that are being done in Nigeria. So when you see the value of Dangote Refinery, it's the insurance company that holds it together. When you see the BUA group, any group at all that you mention, it's the insurance industry that holds it together. Because what we call the sum insured, which you don't understand, is the value of what we secure. So why won't we be the biggest? So please, let's put our hands together for ourselves. So anybody that says we are not the biggest or we are not like it is elsewhere in the world is not sufficiently informed. And let me also add that the insurance industry is probably the biggest employer in Nigeria. Because everybody practically, in one way or the other, gets involved in insurance. And let me quickly describe. So when something happens, when something goes wrong, where do you go to? family and friends, right? Family and friends. So when you don't have insurance and your car has an accident and you call family and friends, those are your insurers. So they are the ones that we have not put yet in the formal sector of insurance. So please, they are part of the insurance industry. Thank you very much. So let me do my assignment. Okay? Ladies and gentlemen, I stand here to represent the Commissioner for Insurance, Olusegun Ayo Omosheyin, and I do that with all due respect. And I do believe that what he has said I should say here today will resonate with a lot of us and will also challenge us to begin to see the insurance industry differently. So, the new mantra that we have at the Commission, and which are telling the whole world, is that insurance company must find a reason to pay a claim. That's a new mantra. Find a reason to pay a claim. If that is our mindset, then we are on the winning path. Then the path that we are charting will win for us. So on that basis, I'll be happy to read this Goodwill address by the Commissioner for Insurance, Mr. Olusegun Ayo Omosheyin, at the BusinessDay Insurance Industry Conference 2025, held at 4 Points by Sheraton, Victoria Island, Lagos, Nigeria. Distinguished ladies and gentlemen, it is with great pleasure that I extend my warm goodwill to all participants at this pivotal gathering, the BusinessDay Insurance Conference 2025. The theme of the conference, Resilience and Growth in Uncertainty, charting the path for Nigeria's insurance industry, could not be timely nor more relevant as we navigate an era marked by both unprecedented risk and emerging opportunities. This gathering reflects our collective commitment to advancing Nigeria's insurance industry amid an increasingly complex and uncertain global environment. We are at a time when our industry, like many others, is grappling with heightened uncertainty, ranging from geopolitical instability and climate-related disasters to rapid digital transformation and fluctuating economic indicators across the world. Yet, amid this fog of unpredictability, one constant remains: the critical role insurance plays in building national resilience. As the insurance industry regulatory institution, the National Insurance Commission has, over the past year, demonstrated visionary leadership and a proactive posture. We have not only regulated, but also catalyzed transformation. Through intensified engagement with stakeholders, insurers, brokers, agents, policyholders, and policymakers, we have fostered greater transparency, deeper collaboration, and a stronger sense of shared responsibility. One of the most commendable strides has been in forging stronger alliances with government institutions and industry stakeholders. These partnerships have been instrumental in deepening insurance penetration across critical sectors of the economy. Through collaboration with the Nigerian Police Force, Federal Road Safety Corps, Federal Fire Service, and other stakeholders, NICOM has significantly strengthened the enforcement of compulsory insurances, including motor third-party insurance, insurance of public buildings, and group life insurance. These efforts have led to improved compliance and an expanded pool of insured Nigerians, ensuring that the protective umbrella of insurance now reaches further than ever before. Let me be clear. The enforcement of compulsory insurance is not merely a regulatory mandate. It is a social imperative. Today, more Nigerians are covered, more properties are insured, more lives are protected. This is a trend we must not only sustain but scale. Through digital verification systems, public awareness campaigns, and nationwide field monitoring. NICOM is making non-compliance increasingly difficult. Compliance is no longer optional. It is the cornerstone of our collective credibility. Charting the path forward as we look ahead. The road before us is long, but our destination is within reach. To ensure sustainable progress, we propose 3 critical calls to action. 1, innovate for inclusion. We must leverage technology to extend coverage to the underserved, those in rural communities, the informal sector, and among the youth. Microinsurance, digital platforms, and inclusive product design must define our new frontier. 2, strengthen regulatory and data infrastructure. As we expand penetration, we must also build robust systems that support accountability, enable data-driven decision-making, and protect the consumer. Transparency must be our watchword. 3, protect insurance culture. True penetration goes beyond numbers. It's about cultural adoption. We must educate and engage the public, demonstrating how insurance is not a burden, but a pathway to stability and a safety net for the future. The journey toward reliance and growth in uncertainty is one we must embark on together. With NICOM leading the charge and with the unwavering cooperation of all stakeholders, I'm confident that Nigeria's insurance industry will not only withstand the storms ahead, but thrive beyond them. Let us work together to build a future where every Nigerian, regardless of status or location, can confidently say, I am covered. With this, I wish all participants productive and insightful conference filled with meaningful deliberation and impactful collaboration. Thank you and God bless you.
Thank you very much, Mr. Ekerete Olagam Ikon. I'm very happy that I did not mispronounce your name earlier. All right, as we move forward in the agenda today, I'd like to make welcome for the keynote address another very important person in the room, because everyone here is truly very important. Now, this person is a distinguished academic, a researcher and author in insurance and risk management. She's been celebrated for her transformative impact on insurance education in Nigeria and beyond. She currently serves as the rector and CEO of the College of Insurance and Financial Management, CIFM, which is a subsidiary of the Chartered Insurance Institute of Nigeria, CIIN. She's the first female in Nigeria to earn a PhD in insurance and was named, I was hoping we would clap, and was named among the top 50 women in insurance in Africa by AIOPILA in 2022. Her academic qualifications include a BSc in Insurance and Actuarial Sciences, an MBA, MSc, and PhD. She is a chartered insurer and fellow of the Chartered Institute of Loan and Risk Management. She also previously served as the head of the Department of Insurance at Imo State University, securing CIIN and NUC accreditation. She has over 30 publications, and she contributes actively as an external examiner. She's an adjunct lecturer, an international assessor, and she continues to shape the future of insurance education in Africa. Distinguished guests, ladies and gentlemen, please make welcome Chizoba Perpetua Ehiogo, the Rector of the College of Insurance and Financial Management. Please make the applause louder. Thank you.
Good morning, ladies and gentlemen. Good morning. All right, thank you. I was wondering who that was until my name was mentioned. Well, I was just trying to develop myself and become a better person. So thank you. I would like to recognize the presence of the Commissioner of Insurance, Mr. Olusegun Ayo Omosheyi, who is ably represented by the Deputy Commissioner for Finance and Admin, Prince Eketeri Ola. Okay, Prince Ekerete Olagam Ikon. Thank you, sir. Apologies for that. And I want to appreciate the Business Day for this opportunity to be here. And I want to appreciate everybody in the house. I need the slide, okay, for the opportunity to be the keynote speaker this morning. Okay, before I start, I want us to throw this line with me. First is that as insurance practitioners, we have first-hand information on the impact of economic uncertainty on our clients. And we have also seen the importance of insurance in ensuring that we restore those businesses as it is. Also, if we could close our eyes in a flash and think about what would happen if there is no insurance business in Nigeria. First is that we won't be here. There will be no job for all of us, two of us. So our importance cannot be overemphasized. So I may be able to say that insurance is a recession-resistant industry. In fact, we can say that one of the synonyms of insurance could be resilience. So we are a business that have come to stay. Also, insurance industry has long in the history adapt changes in various ways. We've overcome the Great Fire of London, the September 11th of the incident in the United States, the COVID-19, the NSARS. All of that, insurance has stood strong and demonstrated resilience in ensuring that there is stability. And also, it's important also to note that insurance company, whoever that prioritize around resilience, has 2.5 times more outperforming and doing better than its peers. All right, we are going to be looking at insurance industry overview, building resilience, the strategies around it. Also, we are going to be looking at innovative solutions, opportunities for market expansion and penetration, and the role of stakeholders in fostering trust and customer engagement, and also a case study and success story. And we conclude with a call for action. Yeah, I will start to say that the economy serves as the backbone of the economy of every society in terms of focusing on resource distribution and consumption. And the financial system powers the economic activities by channeling those funds, which insurance company industry play a key role in ensuring that funds from the place of deficit is spread across to the place where they are needed. Also, we know that insurance industry also is in the business to mitigate risk, promote investment, and ensure business continuity. So we serve as a safety net against unforeseen losses, enabling recovery from economic shock and strengthening economic resilience. So let's look at some of the growth pattern or growth we have experienced over the years. And this has been contributed by the drive to reprice premium, has generated the increase we have in terms of growth in premium. And also that has been as a result of Naira devaluation, which have affected positively some of the premium that are collected in foreign currencies. Also, we have seen market drive across insurance industry, pushing for penetration, pushing for awareness, and pushing for more sales in insurance. And partnership, the presence of NICOM partnering with us, different stakeholders. Recently, NICOM with the CIN had partnership with the federal government to train 1 million Nigerian youths. Their sense is to push insurance far and wide. And that has shown that the premium has increased from, in the year 2019 to 2023, from 508 billion to 1.3 trillion naira. This has helped achieve an annual growth rate of 18%. All right, let's look at the regulatory framework. NICOM has made those steps, and the essence is to strengthen and build resilience across insurance industry, where the bill has already been passed by the National Assembly. We're only waiting for the president to pass it into law. And the whole essence is for more capacity in terms of risk assessment and assumption, and to expand business reach. When we look at the contribution of insurance, when we compare it to other African countries, for instance, South Africa, despite the low penetration in insurance, we will see that insurance has done, in Nigeria, we have done 68, South Africa has done 68, and Nigeria 63 billion naira. Now that's to show that despite the low penetration in Nigeria, South Africa is showing 12.4. Nigeria has proved that we are reasonably increasing our business shares and our market development. And this has been one of the advantages of this is the large markets we have in Nigeria. And we have more opportunities to leverage on this opportunity and to expand the market. Okay, looking at the economic contribution as well, thank you. We've seen that insurance and financial sectors has increased from 3.0% in 2019 to 5.35% in 2023. Also, we are not doing badly in terms of employment opportunities or employment space, but there's still room for improvement and room for growth in the industry. So let's look at some of the challenges that we face, particularly that hinders the growth of insurance and penetration of insurance. And that brings us to the economic uncertainty. That's the unpredictable and unstable economic conditions that challenge business, individuals, and government. And one of them is what? Fluctuation in inflation. So consumer price index dropped from January 2025 as 25.4%, while food inflation still remained at 26% at the time of compiling this information. And what does this do? It affects consumer purchasing power. Also, the exchange rates and Naira devaluation goes at this rate and increases also business risks as well. These are economic uncertainty that affects business growth and insurance opportunities in Nigeria. Also, the oil revenue, which grows from budget consumption of, 5 barrels. And this also causes business risk, making financial planning difficult, especially import-dependent industries. Also have decline in foreign reserve, dropping from 40.88 billion naira in December. Also, the risk of rising debts. What it does is that it limits government spending on social goods. And when there is no fund that circulates in the economy, people tend to make lesser investment as far as insurance and every other business is concerned. So what are the factors that could create this unpredictable environment? So what is the goal? The goal is to build resilience. And that's why we're here today. And resilience is not just the ability to recover, but it is the speed to bounce back and to thrive. So despite the adversity and shock that business uncertainty contributes to, we need to stay strong and do businesses. So business resilience, so what do? All are the plans and strategies to recover, replace, and rebuild critical business processes after disruptions. So let's look at the opportunities. Highland report in 2003, Unlocking Business Resilience and Agility. The report shows that 45% of insurance companies in Nigeria, or as at the time of this report, see themselves as strong and very strong. That's 6% point below cross-country average of 51. So we are not doing badly. Insurance companies that see themselves strong and very strong are 45%, just 6% below the other cross-country comparison. Then, on the other hand, we have 37% of insurance companies that see themselves as very weak or weak. And these are at bar with other industries like government, education, and logistics. Okay, I would like us to look at this and also to put our own insurance industries in place to see where do we belong in this. And that is one, it says, to 10 core attributes of highly resilient and agile insurance or companies. So we have the key attributes to be dedicated people, process, and tools, data analytics, and products. So we are to look at this and to compare where we belong in terms of whether we leverage this and all that. So we are going to look at this, comparing our individual insurance companies and what we are able to do. Do we leverage on data, effective change management, leadership vision, and all of that? Well, the report from the research shows that 50% of the insurance industry leverage on 6 attributes. And these attributes are business intelligence, products, analytic, leadership vision, voice of employee, effective compliance, and adding new capacity. Then barely few industries barely leverage on. These are areas that they barely leverage on, which is effective change management, voice of the customer's process, and employee autonomy. And the report also went further to advise that for companies that invest on sustainable growth and long-term success should prioritize on employee autonomy as listed in this category. So these are the conventional risk measures or resilient measures that insurance company can engage in. And one of them are, the pillars are to ensure solvency, business profitability, risk management, and market stability. So the essence is that for us to remain in business, there is measure and need for us to increase solvency margin, profitability, risk management, and market stability. So let's look at them one after the other. The first one is the insurance industry in Nigeria can significantly increase resilience by adopting the following dimensions, and we have financials, operationals, markets, organizational, societal, and digital to ensure that we withstand challenges and long-term sustainability. So the first is, when there is uncertainty, what is the first point of call as an industry? The first point of call is what? To tighten cost control. We become conservative in terms of spending, how much that we will spend as an industry, as a company. So we tend to slow down on costs and improve on what we have to be able to manage the resources available, because at this time people are changing their spending pattern, and also that is the only way we can retain and stay in business within the period of inflation or exchange rate fluctuation. Then the next thing is to ensure that we have enough working capital to be able to meet up with the daily demands of the business. So what do? Ensure that we improve our premium collections and have short-term investment where we can easily convert cash and to pay unexpected expenses like claims and as they come. The essence is also to ensure that we improve on our liquidity management. Then what do we do next is price excellence and margin. Having economic uncertainty in mind, it helps us also to price-wise margin management, whereby for every premium we are collecting, we are putting in mind inflationary rates, claim costs, also covering for catastrophic risks as the case may be. So the margin management and excellence pricing will also help us to stay resilient in time of uncertainty. Then the second one is operational management. The focus is to ensure that we remain in business and there is business continuity and growth, even in the midst of uncertainty. First is to automate our processes and ensure that we imbibe enterprise risk management, ensuring that we cover all costs and also source for alliances and partnership to help us to minimize costs and risk. Also, it's important also that we look at those inventories that affect the bottom line in terms of the profitability of the business. So what are we looking at? Looking at those inventories carrying costs, things like depreciation that could affect the productivity of the insurance industry, and be able to improve and manage them well. Then another important aspect of strategy is to look at the market position and demand. What is the position of the market? What are the client needs per time? Because whenever there is fluctuation or uncertainty in market business, customers need changes. So as an industry, we need to understand what they want per time and leverage on the market position and demand, and be able to re-strategize, create new products that will meet the needs of our clients and the economy. So there is need for strategic alliance. We can partner with banks, fintech. We've seen how much fintech has overtaken the informal sector. In terms of penetration, who said that we cannot partner to grow our own businesses? Just like we have several partnerships that NICOM has initiated, and companies are also towing that direction. Also, it's important also to reassess our risk portfolio and be able to design products that suit the needs of our clients and the society in a moment of economic uncertainty. Because you cannot, at the time, not produce or develop products that will match the need and the language of the economy at a time. Then it's also important to have experience and first-hand experience with our clients, that is the insuring public, to be able to know what suits them like products like that is personalized to their needs should be developed to ensure that we have sustained loyalty and customer engagement. That is very key. Then the next one is organizational resilience. This is very key. Yesterday at the program we held FIBOB literacy campaign yesterday. I was privileged to speak with the ICO team lead for renewals. And she told me that one of the businesses they do is to ensure that they follow after renewals. And that they have moved in 2003 from 40% to 60% of businesses they have renewed and resuscitate. And are looking at having that up to 80% at the end of 2025. So we need to have motivated workforce that are willing to drive the culture and the vision of the management that flows from the board and be able to run it. During the COVID, a CEO was given a target to achieve a certain sales percentage, and he couldn't find it easy to work with. But one thing he deployed was that he was able to, through the HR, find a list of staff and their addresses and where they live. So where he could be able to meet with them, he traveled to see them. Where he could put up a call, he did that. And what was the strategy? The strategy was that he will not mention the targets, but to ask about their well-being, motivate them, ask them how they are doing, and he'll be able to see that some are living in a place that's not so very conducive. And what did he do in return is that he came back to and made a policy that there should be loan released to staff to be able to meet up with whatever, and there was also measure for recovery. And having done this, having motivated the staff, they were able to achieve that target without any stress. That is the essence of ensuring that we have staff that are motivated and are capable to do the work. When we motivate them and give them incentives that are willing to walk us through and achieve the target and remain resilient with the company. Also, there is need for resilient leadership. Leaders that are fast thinking, that can foresee economic changes ahead of time and be able to create that team that's willing to work to respond to the economic situation as it were. Then there is need to attract workforce, especially in the area of emerging markets, where competitiveness and innovations are required. We need to get IT, tech staff, people that are experienced and are willing to contribute to the growth of the industry. Then the fifth one is strengthening reputational and loyalty by aligning operational society goals. So we need to align with the societal goals and purpose. So we need to integrate sustainable practices, give and be able to offer green products to companies that are practicing sustainable goals in area of agriculture, renewables, and all that. And also there is need for us also as a team to implement robust ESG reporting framework. And also they need to engage with partners. From time to time, there is need for community town hall meetings with stakeholders, be able to contribute to their development and be able to create a presence around the people we work together with. There's a businessman in Nigeria. What he does is that for every election, he sponsors all the political parties. So he does not sponsor a particular party. The essence is that he's spreading his risk, and also whichever party that wins, he is what? He's in a better position. So that's a strategy. We need to engage with stakeholders and make let us and our businesses be on their faces. Then the next one is digital and technological resilient is important as we are growing and going digital, and our businesses, websites, information, data are out there. There is also need for us to improve cyber security and data protection, because companies before now have lost billions because of what? Of loose systems and websites. And so there is need for us, first of all, to improve the cyber security and data protection. We need to invest on such platforms and take security measures that ensure that the information about our clients are secured and that they are not open to threat and all that. I remember I don't know if anybody here has encountered a situation where a loan company is sending you a message that you should help them reach a client that is owing them. And the question is, how were they able to get your contact? So when you take the loan, when they take your information from their app, thank you. So they scoop contacts in that customer's profile. And so from time to time, if the client is not responding, what they do is to do what? To begin to send messages to those information, those contacts. And if you have that person as a family member or a friend, what do? You reach out to them and to say, are you owing any company? They are reaching out, please try and pay up. So these are the loose ends that is important that we cover. Then it is important that also that we improve on data collection and availability and review. So let's take them one after the other. So what do? Robust cyber measures. Ensure that we have web application firewalls and data security to protect organization against threats. Lately, we had a program at the college. A company called us to train their board of directors. And in the course of that training, the chairman of the company asked the facilitator that as he's doing along digital innovations, that he should link it up to what their company is doing at the moment. So what the speaker did was to quickly go through the company's websites as the training was going on, and he came back to tell them that their website is porous. That's the hackers can easily penetrate their website. So, and it wasn't a good site, but it has opened up to them to say that if you have such loose sites, there is need for us to protect particularly the interests of the policy holders that do business and release our data to us for businesses. Then implement data loss prevention solutions. Use secure data storage and backup solutions as well. Comply with data protection regulations. What we need to do beyond the compliance is also to create digital awareness. They need that information within our database are not supposed to be shared with third parties. We sometimes have seen insider collusion to affect our clients' business and where they are robbed and all of that. What are the benefits? To protect sensitive data and all of that. Then the second one, improve data quality and availability. Most times when we collect data from different sources, there is need for them to be for them to be screened and tested. Someone had called up a group of friends to apply for a loan, and they've submitted their information through a site. And so the team, we are excited to look at this information. But while they are going through, they need to validate and to ensure that the information are accurate. You'll be able to see that the first 3, 4, 5 data provided are having the same information, the same figure. So if open the first one, second one, third one, at a point, brain, we're like, this information, we have seen it before. And that's how we went back to see that the only difference between these applications is just that they change their names. They are just the same. So when they went further to make inquiry, they're able to discover that it's just one person. There is business already, but it's just that one person has collided with families to be able to say, let's make it 10 million, so that at the end of the day, they will be able to share the money across. So it's important that the data is validated and the data is also cleansed from errors and inconsistency and is standardized. Then the availability of the data, we need to integrate this data in such a manner that is unified and also open and accessible for people to use. The benefits are insight into customers' behavior, client trend, claims trend, and market conditions are open. Just the telemarks, if you have these devices that will help you checkmate. They have been installed in cars, some are health equipment, that over time, it reads and shows you the pattern of what? A client, and how to profile the client's risk. So it also is important to all the time to review the technology infrastructure. The idea that we are going tech doesn't take away the human aspects. We build humans, we build systems around human before we talk about technology, because any technology that does not embrace or the staff does not embrace will not go well, because they will frustrate every effort to see that platform does not. So it's important that we ensure that we have flexible technology platform that is easy to use, and also they need to scale and assess performance of those platforms over time, whether we are optimizing the usefulness of and they are expanding. Also, there is need also for data management, ensuring that right data are stored. There are backups in case of eventualities. So the essence is to secure and scale, and also ensure that the business aligns with the needs of the client. So we have challenges across technology innovations. They are obvious. We have cybersecurity and data privacy concern. We have loss of infrastructure, connectivity issues, regulatory gaps, and all of that. Then what is the way forward? Strengthen cybersecurity and data privacy concern, ensure infrastructure, connectivity issue, provide regulatory clarity, improve data, just like I've said earlier, and digital literacy and training, also to ensure compliance at all times. Just as small as birthday dates, people find it difficult to release such information without the knowledge of the owner. So that is as bad, is as sensitive as that. So it's important we educate our clients and our staff as well in terms of digital literacy. Then, what are the capabilities that are essential to remain resilient in an uncertain economic environment? What we need to do, we need to grow foresight, disruption preparation, crisis response approach, and strategic reorientation. I will need to run because of time. Let's look at the opportunities for market expansion and enhanced penetration. There are a whole lot of opportunity for insurance to grow. There have been enabling environments. Nikon have been able to steer up the market, which is goal. The Nikon goal is to ensure that there is consumer protection, and insurance is accepted far and wide, and there is trust is being restored. So what do we need to do to ensure penetration and increase market expansion? One is increase awareness. And we've done so well in this aspect. At the program yesterday, I was so impressed that students at secondary school understand what is premium, what is claim, those fundamentals about insurance. It wasn't that same before now. So that's to show that we have taken it up on ourselves to ensure that we push the understanding of insurance beyond the normal. CIN, in collaboration with college, we have train the trainers, which we do across secondary schools. This is also one of the platforms also to push insurance, and the federal government also has incorporated insurance as a course and as a subject in WAEC. During our time, I encountered the insurance across commerce and economics, where you ask what is insurance and what are the economic importance of insurance in Nigeria. I got to know about insurance until I was given admission to study insurance as a second choice. And then all the people that didn't get primary admission in their courses, we are all pushed to insurance. And so that's how we got ourselves there. But what happened was that after the first semester, I found insurance very interesting. That I don't need to meet the CGP required to move to accounting. I made a decision to remain in insurance, and almost most of us made that decision because we saw it as a vibrant industry, a professional industry, and there's so much potential across. So they need to push this awareness and benefits to erode the image that has been there before now is key. Then we need to also adopt the customer-centric approach where we put our customers first, what they need across the value chain from research to the end product. You see that we have the customer's interests, there is empathy in the product development. When a loss occurs, we feel their vulnerability. All of that will help us to achieve deepen penetration and expand the market. Inclusivity is key. We had a program over the few months ago where we had collaboration with UNDP on inclusive insurance. Most of the CEOs that are here sent their delegates, and it was an elaborate time with the facilitators. Some of them came from Kenya to carry out that training. And the most interesting thing is that when we went to the market for market research and development, there is a mindset of that traditional insurance we have. But getting to the market, so we have this mind that we need fire insurance and all of that. But we are surprised that the need of those market women, we are far beyond our expectation. What they need is not actually what we have. So the need for us to embrace inclusive insurance, and we can only embrace it by understanding inclusive insurance that is quite different from the normal traditional insurance. Product innovation and diversification, digital and technological adoption is key. InsurTech is key. So we need, where we need collaboration with telecommunication companies, we need to partner with them to see that we push that. And the regulatory reform, NICOM is doing so great in this regard, and that will channel us to another upward growth and increase in penetration. All right, stakeholders engagement. The key things is fostering trust and customer engagement. So we need to ensure that there is efficient claim settlement that will reassure our client, because this is a moment of truth. When it's a time for claim, is a time for what? It's a moment of truth that determine whether the client will walk into the doors of your company or they will not. So it's important, and we are doing so great. And just like the commissioner stated right now, we need to make it a priority. Let it be a delight that we are paying claims. Someone said that some companies have these appraisal or KPI where if you're in claims department and you have series of claims coming in your profile in a year, that is an appraisal issue. It's not supposed to be so. It should be even a credit that we're able to pay claims. Policy terms and conditions, make it clearer and simpler and easy for customers to embrace. And this is what the fintech has done, that someone in the market, Aboki that is selling young, we're able to have a back account, because they centralized and made it convenient and easy for you to just use your phone number and open an account. And that's what we need to embrace to be able to capture the informal sector and be able to penetrate the market. I remember at the Nikon retreat in 2003 or 2004, one of the CEO asked, why is it that we keep saying that insurance penetration is less than 1%, but at our different companies, we meet our targets. We close our books well. So what is the issue? The issue is that what we do is that at the end of the day, we close our books well, but the question is, those books, those businesses, do they come back the next year? And that's what ICO is doing, where they state that they have a team that is in charge of what? Renewals. So how many of those businesses you closed last year are you willing to have this year? And so what happened is that we see recycling of what? Businesses. So Mr. A leaves company A and go back to what? Company B. So at the end of the day, the same, we are circulating the same value. So these are one of the reasons why the penetration rates, with other factors inclusive, is still at less than 1%. So what do we need to do? The larger market is the informal sector. We need to tap that market, and we can only do that by developing products and carrying market research to know what actually they need and provide such products for them. So the engagement is that there is need for open and transparent communication. Let them know at every point in time what the company is doing, the strategies in place. Even when it's not rosy, let your clients understand that this is the position of the company per time. Also, to develop personalized policy offerings is also important. All right, during our program for ILO and inclusive insurance, we get to see case studies across countries in Africa, in foreign countries, and we begin to wonder, when will I come across a case study in insurance that talks about insurance companies in Nigeria? And so in this discussion, I have to bring to us Asa Mansard case study and the success story. So in our ability to adapt and innovate, so they went into a business venture in 2020, and what is the vision? To become a major inclusive insurance provider in 2020, reaching 3.5 million customers in health and other products. So let's look at what they do: innovation implementation. First thing they did was to what? Set up a new team to manage this business, separating them from the traditional businesses they run on daily basis. Also, they build new capacity. So when I talk about this, you put your mind back to where I mentioned think core attributes that companies leverage, and see if Asa Mansard fall into all of this. All right, so there is capacity building to ensure that they achieve the target for these markets, because they're not going to use the mentality of traditional insurance to run an inclusive insurance. So they did that. Also, they created a milestone, 3 key milestones, because even for you to present a proposal that the board will accept, it must be attractive and direct to achieving a certain goal. So the first thing they said they would do is to understand the market and the market need. So there is need for research. So you will not develop a product and put it to their faces. Rather, you will develop a product according to their need. So Asa Mansard carried that measure, and they in building capacity, they also had trainings with what ILO Impact Facility in terms of research to enable them carry out this. The second milestone is to what? To become more agile. So in new product development and in all the channels of distribution. And the 3 milestone was to streamline internal procedures. So they have to do that. So what are the challenges they had? They encountered the challenge that over time, staff were working for this project, having the mind of what? Traditional insurance. And so to resolve the problem, there is need to call back and begin to develop clear communication and retreat across the stakeholders. Also, they institutionalize their report project and give updates on what is achievable and what has been achieved over time. And also there was monthly newsletter for project updates and what has been achieved. So what is the takeaway from this? We saw that Asamasa didn't actually partner with any industry or any company. What they did was that there was cross pollution of ideas from different departments coming together to generate ideas and push it forward. Then there was internal capacity. They had inbuilt what? Capacity to drive that vision. When we saw also the agility, intentionality, and aggressiveness essential in achieving this product. Also, there were evaluation and track record to see how far each person have done, and it also added to their KPI to see what they have done. So I think this is a good way and a place to clap for Nigeria insurance industry for that. And there are other companies that are doing big things, developing apps to ensure that they push the market forward. So I will conclude to say that resilience is key for Nigeria insurance industry to navigate economic uncertainty. And the strategy is to look into financials, operations, technology, and society dimensions, ensuring that they survive and thrive. And what is that approach? Multidimensional approach, providence, efficiency, agility, and relevance to ensure ability to withstand shock. And what are the enablers? Technology. Fostering leadership, strong leadership, voice of the people, building strong stakeholder relationship, fostering trust, ability to be flexible to changes in the market, and to develop all the capabilities to run the business. What is our goal? Our goal is to remain resilient, to emerge stronger with innovation solution and sustainable practices. And I will end by saying that as an industry, when we consider a candle is beautiful on its own, but what happens that it burns itself. So as an industry, if you want to think resilience, if you want to think sustainability and growth, there is need for us to think technology. There is need for us to think thoughtful leadership. There is need for us to think capacity building. And there is need for us to be flexible enough to accommodate opportunities. Thank you, and God bless.
Thank you very much, Ma. We would like to also recognize our online audience. Once again, please put your hands together for her for delivering that beautiful keynote address. We would like to recognize our online audience joining us today because we're also streaming live on Business Day television. We would like to please ask you all for one thing very quickly. For 1 minute, please take out your phones. And then check for Business Day. When you type Business Day television, you would see Business Day popping up. We'd like to please ask that you or your friends please subscribe to our YouTube channel so that you can also get to watch some of our content. We are always broadcasting daily, and also for events like this, we always make sure that we are streaming it live. So you can also share to some people that you know will also benefit from this. Right, it's on your screen, so you could just scan the QR code on your screen and then just go ahead and subscribe. Thank you very much. We'd also like to recognize those joining us from the diaspora. We know that we have someone joining us from Cameroon today is in the room. We'd also like to really thank you for joining us today. Also for our sponsors today, we recognize you as well. Nortakaful, Sunu Assurances, MyCover.ai, Stren and Bland LP, Stanbic IBTC Insurance Limited, Leadway, and First Insurance Brokers. We truly recognize you and we appreciate you. I hope we've all subscribed to our Business Day channel. Have we? Thank you very much. At this juncture, we would like to please welcome for the first panel of the day. And this first panel will be speaking all about navigating uncertainty and expanding access in the insurance sector. And to moderate this panel is Adeyemi Kehinde, is the reinsurance senior manager at Leadway Assurance PLC. On this panel, in no particular order, I'd like to call on the Registrar and CEO of the Chartered Insurance Institute of Nigeria. She has over 2 decades of experience in the insurance industry, and she began her career as an underwriter at Great Nigeria Insurance PLC, steadily rising through the ranks. She holds a bachelor's degree in mathematics from Olabisi Onabanjo University, a master's in actuarial science from the University of Ibadan, and an MSc in risk management and insurance from the University of Lagos. She's a fellow of the Chartered Insurance Institute of Nigeria, and she has participated in numerous local and international training programs. She's a faculty member of both the College of Insurance in Asheshe and the Financial Institutions Training Center, FITC. She also serves as secretary of the Market Development and Government Relations Subcommittee of the Insurance Industry Committee. She's a certified ILO and UNDP trained expert, and her dedication to knowledge sharing has led her to facilitate trainings across and beyond the insurance sector. Distinguished guests, ladies and gentlemen, please make welcome Abimbola Omowumi Tiamiyu. She's the registrar and CEO and the secretary to the Council of the Chartered Insurance Institute of Nigeria, CIIN. Also joining us on this panel is a fellow of the Institute and the Faculty of Actuaries and Actuarial Society of South Africa. He is a CFA charter holder with more than 10 years post-qualification experience. He holds a master's degree in information and data science from UC Berkeley and bachelor's honors degree in actuarial science. He is the executive director technical with Stanbic IBTC Insurance PLC and has almost 20 years experience in insurance and actuarial science across Africa. His areas of expertise include risk management, solvency assessment management for insurers, business development, product development, and pricing. He continues to play a pivotal role in the insurance business across 14 countries. Please make welcome Duni Semwayo, the Executive Director, Technical at Stanbic IBTC Insurance PLC. Also joining us on this panel, she is constantly dedicated to mentoring young professionals, especially women. She holds a degree in business accounting from the University of Lincolnshire and Humberside and is a fellow of the Association of Chartered Certified Accountants, FCCA. She's also an associate of the Institute of Chartered Accountants of Nigeria, ACA. She's also a chartered member of the Chartered Insurance Institute in both the United Kingdom and Nigeria. She's a seasoned financial service professional with over 2 decades of experience, currently serving as the Chief Client Officer and board member at AXA Mansard Insurance PLC. Since joining the company in 2005, she has held several strategic roles, including being the Chief Financial Officer and the Chief Distribution Officer, overseeing functions including finance, compliance, human resource, technology, and retail distribution. I'd like to end there. Please make welcome Rashidat Adebisi, the Chief Client Officer and Board Member, AXA Mansard Insurance PLC. Also joining us on this panel is the team lead of the private equity, capital market, and mergers and acquisitions practice at Stern & Bland Partners. He holds dual bachelor degrees in English and Literary Studies from the University of Ado-Ekiti and law from the Coventry University, United Kingdom. He's also earned a master's degree in international corporate governance and financial regulation from the University of Warwick in the United Kingdom. Please join me as I make welcome the team lead for private equity, capital markets, and mergers and acquisitions practice group for Stren and Bland Partners, Noble Obasi. Please. Also, I'd like to please recognize also in the room today the DG of the Nigerian Insurance Association, Mrs. Bola Odukale. Just before the panel, we need to take a quick picture because we know that the commissioner will be leaving us right about now. So please, just with the speakers very quickly and as well as the editor. Also, the Chief Sales and Marketing Officer for BusinessDay, Mrs. Ijoma Ode, please, we'd also like you to join in this photograph, please. Thank you. Representative of our sponsors, please come forward, please. Thank you. North Akaful, Sunu Assurances, MyCover.ai. All right, our sponsors, please. The representative of our sponsors, North Akaful, Sunu Assurances, MyCover.ai, Stren and Bland, Stanbic IBTC Insurance PLC, Leadway, and First Insurance Brokers. Just the sponsors, please. Thank you. All right, the panel begins. This panel is focusing on navigating uncertainty and expanding access in the insurance sector. And it will be moderated, as I said earlier, by Adeyemi Kehinde, the reinsurance senior manager at Leadway Assurance PLC. Please put your hands together for them before this panel. Thank you so much.
Yes, thank you so much. So, the topic for this panel is navigating uncertainty and expanding access in the Nigerian insurance sector. So, just before we go to the question, so I like to make an assessment. I brought in an umbrella here for you to know what insurance is all about, because my aim here is not just to strike this conversation, also to make some perspective. So here is an umbrella representing the insurance in Nigeria. You can see this umbrella here has power. It can cover the risk of an entire nation. But how many risk is under this umbrella? It is less than 1%. The contribution to the GDP, less than 1%. So we can have 100% under this risk, but the potential currently is 1%. It shows that we need to bring in all innovative technique to bring people under this umbrella. So amidst that, this umbrella here is shaking. Why is it shaking? Because of high inflation level in the country. There is so many things that is happening in the country, interest rate, volatility, and co. So those are the topical issues that we are going to be discussing today. So, thank you so much. So my the first question for the day is to Mrs. Tiamio. So she's holding the umbrella. So as this custodian of the professional standard, how is CIN reshaping actuary and insurance technical education to better equip insurer for managing risk like inflation and natural disaster in today's volatile environment?
Thank you very much. Good morning, everyone. Thanks to the organizer of this program. Two questions in one. How is the Institute supporting the industry to shape actuarial development and insurance development? So I'll start from the other one because that's our core strength. For insurance development, we're actually working with the insurance companies. We're not doing anything except to train, to conduct exam, and to do seminars. However, we're sure that each insurance organization, that's the insurance companies, brokers, loss adjusters, they are actively involved in sending their members for all these organized trainings. So you see an NCRIB doing training on some aspects of insurance. You see ELAN, you see CIN, you see the college working together as a team to ensure that all the insurance professionals are trained. But specifically, there's partnership with the Nigerian Actuarial Society to develop the actuarial capacity. Why is that so? We have the opinion that for now, we have enough insurance practitioners. All we just need to do is to follow the rules and do the right things at the right times. But we lack capacity in actuarial development. Prior to now, the regulator was sponsoring people to do the actuarial exams. But the particular exam we were doing in the country was scrapped by the Faculty of Actuaries. So what we're doing right now is to see how we can talk to the Society of Actuaries and other actuarial firms outside of Nigeria, get the exams restarted. But before then, the Nigerian Actuarial Society have partnered with the Institute to get them from the university. So we have an internship program now whereby 300 level students, 200 level students, and master students in insurance and actuarial science go into the insurance industry and go as interns, maybe for 4 weeks, for 6 weeks. For the masters, it's usually a 6 months program. So the plan is, if we are able to get those students to see that they have a future in the industry, they will stay. If we are unable to get them to see that future, they will run away immediately they graduate. So we are trying to catch them from the university through partnership with the Nigerian Actuarial Society. Apart from that, the NAS too, they've partnered with some schools. I know they've partnered with Habuzari and Unilag to go in and lecture the students on the master's level. The reason is because the Society of Actuaries actually said before they can grant recognition to some of our courses, actuarial courses in Nigeria, it must be taken by certified actuaries. And most of the lecturers are just academia, they are not actuaries. So the society, the Nigerian Actuarial Society had to go in, become adjunct lecturers, and they started lecturing in this university so as to give the certificate more credence. The College of Insurance and Financial Management also is doing a lot to ensure that they partner with international organizations to make sure that we have international best practices trained into the people, and then we develop the industry as a whole. So in summary, I think we're doing quite a lot. We just pray that God will crown it with great successes at the end of the day. Amen.
Thank you so much. That's quite insightful. So my next question is to Mr. Senwayo. So from a technical operation perspective, what internal innovations has Stanbic IBTC Insurance adopted to manage risk from inflation and volatile claim costs?
Good morning, and thank you for the question. I think from a Stanbic perspective, our approach to risk is what we call the 3 levels of defense, where we start with the business, they own the risks, and they actively participate in terms of managing the risks, making sure that they're identified, captured, and everything. And then obviously we do have compliance and risk that plays the role to be able to, review those things to make sure that you're running the business appropriately. And then you have got the third level, which is your internal audit. External audit comes as a fourth pillar. So I think for us, when we think about risk, that's the first thing that, we think about inflation, we think about, volatile claim experience. It could be, due to exchange rate or whatever movement that could happen. I think that's the sort of first aspect. The second aspect is to think around, how do you actually run your enterprise risk management processes, and what governance do you have to be able to do all those things appropriately. So if you think about, let's say, the inflation, the impact of inflation on your annuity book, what sort of aspects do you have from an asset liability management to make sure that when you price your products, and on an ongoing basis, how you invest to make sure that your returns match whatever liability profile that you have. I think the third aspect that's important is around, actually developing a risk appetite. So as a company, if you think about it, let's say inflation, so you're running a general insurance business, and you're worrying about inflation in terms of, value of cars, value of parts, all increasing all the time. So, you have to think about what is your risk appetite. Is that risk that you want to accept? So once you decide that it's a risk that you accept as a business, how then do you invest to make sure that you match those, closest possible to inflation rates? If you think about risk appetite, let's say you are insuring some assets that are in Forex. Is it a risk that you want to accept on your balance sheet? So we at Stanbic, for instance, there are certain risks that we say we don't have appetite to accept these types of risk. And therefore you work with partners that can accept those risks. So some reinsurers with strong balance sheet would be able to accept that. And then obviously you need to track. If you think about, I know I'm taking a bit of time, just one last point. If you think about what the regulator has come up with in terms of the asset liability matching for annuity, following one of the, annuity providers getting into problems, that sort of metric speaks to how you think about managing risk as a business, which includes inflation, which includes claim volatility. And I think, when that sort of measure came through, at Stanbic, we were very comfortable because we didn't have to change anything to be able to submit that report. Is something that's part of what we do, from like tracking risk, managing risk on a day-to-day basis. Thank you.
Thank you so much. That's quite insightful also. So the next question is Mrs. Rasida. So this question is from your experience managing client service. In managing client service, what do you see as key behavioral pattern preventing insurance adoption, especially among young Nigerians and informal sector workers?
I think you are expecting us to answer shortly, but if we all knew the answer, I'm sure that we will have a much bigger market than we have here. So I will break it into maybe two key parts. One is about the clients themselves, and one is about the insurance companies too. From the clients themselves, you have to pay insurance today for a purported unknown risk that could come up tomorrow. That point of, do we know whether your reward is going to be on earth or in heaven, is still one of those barriers, because people think that if I pay now, I don't know if I'm going to need it, and I might never need it. So there's still that mindset that, will it really help me? And when you put that beside young people today, they have this you only live once mindset, right? And you're saying, I only live once, and I'm going to put this money here. I don't know if I'm going to benefit from it, right? And when they start to think that way, and they look at, okay, what if I need it? What is the multiples I'll get? The multiples on insurance that they've put in place might not be adequate for the sort of, realities that they are facing. So in the end, they will prioritize putting money on investments, putting money on
even betting, yeah, because even though everybody knows that in betting you might not win, but in insurance you would always win at some point in time. But from them, they're just thinking about today. So for us, we have to rethink our approach to be able to manage those sort of barriers that they are facing. But okay, what other benefits can you get today from an insurance policy? We do have benefit policies, and we have risk, pecuniary situations that could or could not happen. So that's one area of it. And I think the third one I would like to touch on for young people, and even and I'll talk about informal, young people also has to do with financial risk trainings that we're having. They're not comprehensive. We talk about how to invest your money, save your money. We don't really talk about how insurance is a wealth management tool. It's a protection. So if we improve the ability to sort of train them better and include ourselves in the whole financial advice process, we'll be there. But right now it isn't there. On the informal side, it's really around, the typical ajo, the typical other things. So when you think about what Dr. Hegu talked about when she was presenting, we haven't really improved our processes to serve clients who are different from our norm. Our norm in our industry is large corporate organizations, international companies that will give you big premium at once. Whereas to actually collect from people in the informal sector, they want to see you. They need to know where they will go to. And we don't have many branches. It's not financially viable as well. So we need to rethink our approach of how they can access us. And I'll stop by just talking about the insurance companies ourselves. We are also, hindering them because we're not making ourselves easy. We're not making ourselves simple. We're not as attractive, or if you like the word sexy, and we're not touching on topical topics that the sort of risk they are facing and how they can manage it. That itself is a big barrier for the young people, because if you're not listening to them, you are offering what you have, not what they want, then you really aren't going to make the desired level of progress that you need to make as an industry. And maybe the last, if you just mind me to ask, you talk about inflation. We're not repricing and really addressing the true risk people face. So I don't think anybody here can buy a car today that they bought 4 years ago at the same amount. I mean, if you bought a car that is 4 years old, for the first time, after the devaluation, you have actually increased value of your car. So a 20 million naira car is being sold for 80 million naira. But many of us has even been depreciating the value of the car that we're insuring by 5% or 10% every year for our clients. So that car 5 years ago, maybe we're valuing it for the client at best 10 million, because maybe you're a good company, you ask them to increase it. But that car, the replacement value is 80 million. So when that car has an accident this year, we negotiate, we do everything. We give the client back 10 million. The client cannot use that 10 million to buy that 80 million naira car. So our inability, and if you don't mind me using our lack of courage to help our customers reprice properly to the right value, means that we're not really serving them. So when the risk happened, we didn't really do what we're meant to do, put them back where they were. We just put them back in something. So that in itself is actually one of the biggest barriers. So if we can't face the courage to price properly, to revalue, then honestly, we can't make progress. Thanks.
So the next question is to Mr. Noble. So as a legal and capital market expert, what structural or policy reform do you believe will unlock private equity and capital investments into the Nigerian insurance industry?
Okay, thank you very much, everyone, and thank you very much, and good morning, everybody. So, in terms of unlocking investments in the insurance company, right? So we are going to look at it from the investor's perspective. So I'm an investor and I want to invest in the insurance company. So what am I actually looking for? First of all, I cannot come to invest in a company where the regulatory framework is unclear, right? So as an investor, I'm looking at your company, I'm looking at your country, because most of the investors that invest in these companies are really, foreign clients, foreign oriented, and even the indigenous investors and the HNIs, right? They need to really ensure that there is a clear regulatory policy in the country. So if our laws are not very well protecting their interest, I'm not sure they will want to come in. Secondly is access to the capital market. So an investor is looking at the capital markets of the company itself and thinking to himself, if I do a CP in this insurance company, how protected would my investment be? I mean, if the investor is not getting that sort of access in the capital market, then there's really nothing the investors is actually looking for. And the third part of it is the the other aspect of it is exit, right? So as an investor, I'm investing in an insurance company. Am I guaranteed my exit? So what are my exit possibilities? Am I going to do an IPO on this private company? Am I going to do perhaps an M&A? Am I going to do a secondary buy on this country? I mean, these are key considerations that an investor is going to look into before he goes to invest in this sector. Thank you.
Yes, thank you so much. Thank you so much. So this is quite insightful. So for our audience, please make sure you are writing your questions because you are also going to contribute towards the discussion. So the next question is to Mrs. Tiamiyu. So what are the Institute's strategic initiatives to support insurers and underwriters in expanding access to insurance for Nigerian underserved population, mainly through microinsurance?
Thank you very much. The first one that we have done or we're doing is to encourage insurance organizations to adopt a school. We keep saying, let's catch them from young. All of us in this room, we're like dried fish, we can't bend again. So we're already bent to whatever we want to do in insurance. But those young ones, they have a future in insurance. They are untapped resources for the industry. So organizations are being encouraged to adopt a school. It could be your old school, the secondary school you went to. It could be the primary school you went to. It could be anything, a school in your neighborhood where your companies are or something. So you catch them from young. Apart from that, the Institute is also working in collaboration with the college to ensure that we also train, and we keep training. Yes, we may say that support has not been so good or patronage has not been so good because a lot of people prefer international trainings for obvious reasons. But we see companies sending staff members to still come and listen and learn. So our hope is that by those learnings, they will be able to put it into practice in their various fairs and then latch on to improving the industry. We also collaborate with BusinessDay and all other media organizations to make sure that insurance is taken to the grassroots. But the most significant for now, the latest one, is the partnership with the UNDP that is driving microinsurance and inclusive insurance to the barest masses. So that's the one we're currently on. That is being done through partnership with the College of Insurance and Financial Management.
Yes, thank you so much.
Thank you.
So the next question is to Mr. Semwayo. So what opportunity do you see for embedding insurance into banking platform to deepen access and simplify uptake of insurance to low-income earners?
I think, banking plays a very, important role because, if you look in the insurance industry in Nigeria, the penetration of insurance into the retail side is significantly lower than on the corporate side. So I think banks have, expansive distribution models from, branches to their platforms. You interact with your bank more often than you interact with your insurance company. I always think that you hope you never have to call your insurer. That should be what you think about when you're buying an insurance product. So, banking, you interact with your bank more. So I think, banks play a critical role in terms of having that, what we call, the last mile to the customer. They will help insurers, be able to reach customers in an affordable way. But I do think that there are some, things that needs to change. In countries where bank assurance have been significantly successful, it's also because of what regulation permits. In Nigeria, from a regulatory perspective, if you read the rules that CBN and NICOM have jointly written, they make bank assurance not attractive to banks, right? So in most models around bank assurance, the bank gets the bulk of the profits, primarily because they are the ones that are really giving you that opportunity. So I think the regulation needs to evolve to be able to allow, for number one, to incentivize banks to actually do it, right? So if I'm not a shareholder or if I don't commonly own the two institutions, both the bank and insurance company, there is no incentive for the bank to do it, because the maximum value that a bank can get is 40% of the commission that a broker gets. So I think regulation needs to change to be able to allow for that to happen. So currently, if an insurer and a bank are part of the same holding company, you can't have a bank assurance agreement. So there are quite a number of things that needs to change from a regulator perspective. But I think, bank provides opportunity for the last mile. They've got significant opportunities for data because they know what clients are buying. If we see you buying nappies, we know that you're going to have a child. So, it's an opportunity for you to do other things. So I think they've got last mile, they've got data, and the collaboration is key. But for that collaboration to really work, we really need a change in the regulation, to help with that.
Yes, thank you so much. So the next is to Mrs. Rashidat. So how is AXA Mansard using technology to improve customer experience, trust, and claim transparency, especially in uncertain times?
Do we ever have uncertain times? Is the question I have to ask these days, because every year I say that is tough, but it seems another tougher year is ahead. But 2025 is a great year, so we won't go there. So I'm a tech enthusiast, I like to say, because I believe that technology has the ability to democratize and create transparency, remove all sorts of opaqueness, and ensure that everybody understands things if it is well implemented. So on our side, I would say we're on a journey. I'm not sure we're actually at the high destination. We were working with tech partners where we've been able to use AI tools, for example, to be able to do car inspection. So typically in Nigeria, we don't have a database, a motor database that we can all count on, that will ensure that the car exists and is in a good condition. It's one of the uncertainties in Nigeria. If you're selling motor insurance abroad, you don't need to worry. You just go to pick the car details. But here in Nigeria, you need to get the details. You need to see the vehicle. So we're partnering, for example, with a digital partner to actually do inspection at a fraction of the cost it costs to take our staff there. You can empower the customer. You can do some level of, validation of the location where it was done, what was done. It keeps the video. The AI checks all the scratches and all. And you can also use that tool when there's a claim to compare the vehicle, the condition as it is when after the accident to what it was before. So the new incidences, the one that was there before. So you can use it to manage claims, and also what is new. So I think that's been very interesting. We're also using some level of digitization and technology to simplify life claims liquidations, for example, where we're now having maybe about 85% of those claims being done without any interruption at certain levels, with the right tools being used to check for fraud, being used to check for things that aren't there. And maybe one other thing we're also working on is that you can actually file even traditional claims through a digital solution we've created. Through that platform, it's end-to-end for certain thresholds, which I'm not allowed to mention, without any human intervention as well. So I think those are things that will create that point around they delay my claim, as well as looking for, we're now trying to work on how can we get the customer to know the stage at which the claim is, what's going on. So that's something that is work in progress. We're not really there yet, but we also like to do a little bit more around just empowering the customers from a claim standpoint to know what exactly they're covered for and what they will get. I think that's another area, especially on the healthcare side, but I'll stop here because they're really looking at me.
Sometimes we need to manage time. So Mr. Obase, so this question is to you from your experience. How can partnership between insurers, fintech, startup, and investor be legally structured to accelerate access without risking compliance or consumers' trust?
Okay, thank you very much. So in terms of partnership, right? So when we look at the insurance company, the insurtech and the fintech, we see a lot of strategic alliances, right? I know AXA and I think AXA Mansard and Carbon, they did a sort of a strategic, partnership, where perhaps they use their interoperability, they deploy perhaps I'm talking about Carbon, their fintech expertise. Why AXA Mansard comes with their own traditional insurance expertise, and it becomes a very good platform for insuring and showing insurance to the world rather. Again, you see a situation where there's a JV, a joint venture, right, between the insurance companies and the fintech, right? And also in terms of strategic, in terms of collaboration, again, we see the era of technology, right? I know my cover AI, they recently raised funds, and I think that was in 2023. So they raised funds for insurance, for deploying insurance activities, experts for training, for onboarding, for expertise about insurance security. So essentially, right, these are ways, where you see a lot of collaboration. And in terms of collaboration, right, again, like the first question, my first question where I answered, right, there is a need for an enable and a very strong regulation in the country, because without this regulation, the collaborations that we see between the insurance company, the fintech, the insurtech is not going to exist, right? Thank you.
Thank you. So back to Mrs. Tiamiyu. So given your role in setting industry competencies, how do you see AI and data analysis being embedded into future training to help insurer better predict and respond to uncertainties?
Thank you very much. Embedding or onboarding, using AI to improve trainings. From the Institute, yes, we believe that technology is good. But you will not agree with me that technology has a very bad side to it. For now, we are not fully embracing technology in the training and examination process because of the bad side of it. However, we rely more as a date on feedback from participants. What do we mean by that? Instead of me to use AI to determine somebody is buying diapers and because of that, the person is having a baby, that example you cited. What we rather do is you come or we get feedback from our clients, which are the insurance organizations, to say, what are your areas of need? So we have not gone to the level of using AI to determine the insurance, the future needs of the industry. We're actually waiting for feedback and what we see. For instance, we know that a lot of companies are going into cyber insurance. We don't need AI to determine that. So we know we need to train and develop in that. We know we are expanding in micro insurance. We will train and develop on that. We have feedback from members that though there are deficiencies in the deployment of IFRS 17 and what have we will do that. So right now, insurance AI is not one of our core usage in developing trainings and development. It does not mean that we will not get there later, but we're just being careful, because by the time we deploy fully AI and we say we want to start embedding it into training and examination, the few experience we had on training was not palatable. People log in when you want to do training and they are not listening. They are doing other things. So when you tell them to do the exam, they will tell you, you did not teach us this, you did not teach us that. And you're like, but we took this thing. Obviously they weren't listening. So from experience, for now, from the Institute, we do not deploy so much use of AI in development of training modules and examination process, but we can improve.
Thank you so much.
We will improve.
Yes. So, Mr. Sewayo, so how can underwriting model evolve to accommodate new and emerging risk in Nigeria, especially as natural disasters and climate-related events become more frequent?
I think, so from a general insurance perspective, climate risk is definitely making insurance very expensive. And I think there is an importance for, the industry to look at the, how much it will impact in terms of, premium increases. And I think the first things is just to look at, previous events that have happened. How has it actually impacted, farmers? How is it impacting, claims on property and all of that. So I think it's a matter of looking at prior history of what is the impact. And I think in that regard, you can even look at separate countries. So for me, I think it's really requires collaboration across the industry, especially if you are going to look at how it's impacting, because each and every insurer might be impacted to a greater or lesser extent. But if you're able to share that information across the industry of claims that can be assigned to that will be quite important. I think for a particular insurer, one of the things that you need to do is to do scenario to say, looking at other countries, if your claims are to go up by 10%, 20%, what is that impact on your premium? And then you start adjusting for that. The last point that I would make is that insurance is supposed to be risk pooling, right? So there has to be some level of sharing of risk. Once you start to make everyone, pay for their own risk, by that I mean, in one of the countries which I worked in, South Africa, one part of the country, KZN, has significant impacts of climate risk. The premiums in that region can be as high as 40 or 50%. You're actually starting to get insurers rethinking whether they, from a retail perspective, they want to cover them or not. And I think what's important is how do you actually think about, for one of the companies that we worked with was to diversify. How can you actually reduce your exposure to that region whilst increasing your exposure in the other region to lessen the impact? Because I think if you price each and every single risk of what AI and data analytics now allow, you actually also move to the point where it's almost as if everyone is paying for their own risk. There isn't an element of risk pooling. So I think it's really looking at the impacts, comparing how it has impacted other countries, looking at the history, and you can see that farmers are already being impacted by climate.
Thank you. Thank you. So, Mrs. Rashidat, can you share your experience where insurance literacy campaign significantly impacted public perception and uptake in underserved communities?
So I would say to you that I think we had some examples shared today. There's been a lot of activities that's been happening where people are going into not just Lagos and in the big places. Even in Lagos, we have the markets, we have, some areas where literally they need that education. So I first of all have to thank, the CII, the NIA. There's been a lot of sort of awareness building activities that's been happening. I think there was a time we went to different local governments across the country as well, where we had insurance companies just go on. A few of my team members actually went by boat to one community with other people, and that was able to raise more awareness. So when I heard the point today that students now know what is premium, what is claim, we were not at that place before. So I would say that we've made, sort of a path forward. On our side, for example, we also ran an initiative during our inclusive process where we went into the market and we're asking them questions on how they manage risks. I think that was very impactful for us because it helped us to change our product offering. So apart from the fact that you can educate people more, you actually learn how to better deliver those solutions in those communities, how they are using it. Why? It is what people are used to that they work with. So if I take South Africa, where funeral insurance is such a big deal, is because they had a culture before where people were putting money together to take care of themselves during the funeral. So when they did the insurance, it made sense for people to buy funeral insurance. In Nigeria, God forbid, it's not something that everybody wants to talk about. So here we have people who are using Ajo, who are paying money. They have, I've spoken to market women, they have 6 different types of contribution: daily, weekly, monthly, every 3 months. So we have to rethink our approach. We have to rethink how we're working with them. So that's the way the work is. So if I will summarize it. Yeah.
Thank you. So Mr. Obase, lastly, what is your legal and financial implication of increased merger and acquisition activity in insurance space, particularly as firms seek scale to survive in uncertain environment?
Take it.
Okay. What are your legal and financial implications? Let me take it again. So what are the legal and financial implications of increased merger and acquisition activities in the insurance space, particularly as firms seek scale to survive in uncertain environment?
Okay, thank you very much. So essentially, when we talk about M&A activities within the insurance space, so again, M&A is one of the ways of restructuring companies, right? Where you have one company that wants to acquire the another company. So for an M&A transaction, you typically look at compliances and approval. So within the insurance space, you look at so first of all, any M&A within the insurance space, you need an approval from NICOM, National Insurance Commission. You need an approval. Right now, I think CBN is even involved, and you need an approval from FCCPC, right? So there wouldn't be any sort of M&A that would go on within that space without those approvals being cleared, right? And secondly, in terms of the insurance company, so M&A is looking at including the reps and warranties, which you are going to actually include as clauses when you are doing your legal due diligence, right? Or your risk management in companies that you wish to, acquire. So by looking at those instances, you are ensuring that the company, the insurance company is really sorry.
Continue.
Okay, you're ensuring that the insurance company is really the company the sector that you want to invest in, and that you've taken care of any exigencies or any eventualities that is going to come that would arise after the M&A activities. And also doing M&A, we look at risk diversification. So for every M&A transaction, there is actually what one of the company is doing that the merger wants to expatiate on or wants to amplify on, right? There's a product line that perhaps, say, if the insurance company is is doing life, and perhaps M&A is going to come in to say, what, there's a lot of risk within this, why don't we diversify to non-life, right? Or perhaps take it bigger to to insurance. So those are things that M&A definitely consider when they are going into that sector.
Yes, thank you. So let's throw the conversation to the audience to ask this esteemed panel what you feel about this conversation, navigating uncertainties and expanding access in the Nigerian insurance sector. So we're throwing the question to the audience. So somebody else. Okay. So.
Thank you very much. My name is Femi Abiodun from Leadway. My question goes to Mrs. Rashidat. I just want to ask, on a scale of 1 to 10, how would you rank the adoption of that tool that you mentioned for inspection? Would you say, what on a scale of 1 to 10? Can you just say, tell us? Thank you.
For taking the questions one by one. So, they've talked about change management. We have learned from our own experience of launching new tools. So we don't launch across board. So in the first pilot, the first 15 or 20 people that used it, the adoption level was a bit low, which made us to maybe about 30% concluded it. So we made some changes, simplified the process. By the time we expanded it to a team of 50, we saw an improved level of adoption of those who were using it. So within our own employees who are trained, who are using those tools, who have been approved to use it. So we don't do company-wide anymore because we sometimes find that they're not getting the right support. So we have a process where we're supporting it. So I think as the latest expansion we've done, the last proof of concept that we did, which was across regions, we actually saw in the 70% adoption for employees. For clients, it depended on whether the client was digitally savvy or not. For digitally savvy customer, it was so seamless. In fact, one customer called me and told me this is such a great tool. But for those who are not digitally savvy, we see that there is a problem. So you need to help them. So what we do is that we offer a phygital option, physical and digital, to clients to say to them, what would you like to do? We can have someone do it for you, or we could, get you to do it yourself and guide you through. So what we're using now is how-to videos. Like simplified videos. We're working with a particular company who is also creating simple, digitalized, more gamified training materials that can be used by both our staff and clients to use that tool. But I think it's an exciting opportunity that we can leverage as an industry. And we're already having conversations with the NIA around some of the innovations that will be cheaper and more affordable if many more people used it. So maybe that's also a window that we can discuss. Thanks.
Thank you. Just one more question and
Okay. Good afternoon. My name is Shola Ogune. I work for Linkers Insurance Brokers. My question goes to Mr. Semayo. I want to ask a question on annuity. Do you think annuity practitioners, like insurance companies, should have their own custodian? Like you have PFA has a PFC that warehouses the fund. Do you think the insurance company should have something like that, like a custodian that separately manage annuity fund, so that it can be, technically tracked, so you know what is from annuity? Because the risk facing annuity business is quite different from the risk facing traditional insurance. Do you think the industry should look at that? Should that be a policy or an enabling act or a guideline from NICOM and PENCOM to have a separate custodian house that manages annuity fund? Thank you.
All right. So I think currently it's already a custodian. So in the current setup, as the retail life annuity provider, all the assets are kept with the custodian that you have to appoint. And that custodian is approved by both PENCOM and NICOM to actually provide that custodian service. And whenever an insurance company has to move the surplus fund from the investments for annuities, they need to get approval from NICOM. And there's actually a rule that you can't transfer more than 80% of that surplus. So they are only the custodian, as in they hold the assets, but they don't make the investment decisions. You, as the retail life annuity provider, you make the decision. So I think what is quite important is to ensure that the way those assets are managed is in line with the way that is expected if you are selling retail life annuity. Because what usually happens is that if you invest those assets in a way that does not provide what I could say matching of the assets and the liabilities, you then create a challenge that even if the custodian is holding those assets might even be less than the liabilities that you have. The other problem is also pricing. There was a season where insurers were very aggressive in terms of pricing because they're trying to compete with program withdrawal. In that way, they actually, in a way, there is a possibility of exposing, annuitants to significantly more risk, such that the funds that are being held might not be sufficient. But I think, the guidelines that NICOM has produced recently, I think will make sure that companies, as much as possible, manage the assets backing liabilities for annuities more closely. I actually even saw an article written by Milliman, which is a global actuarial firm, where they were actually referencing that that guideline that NICOM has produced, which I think was long overdue in terms of providing the guidance to. I think there is still a bit of a challenge in terms of just the pricing and some of the cost issues that are there, with annuities. Because if you think about it, right now, interest rates are like 17%, like on a 2053 bond. And if you say an annuity today, you're basically, going to buy this bond. However, you have coupons that you have to reinvest, and those yields are going to come down in future. So, so in terms of your pricing, you need to be, circumspect and make sure that there is not a significant, aggressiveness around that. Thank you.
Thank you so much. So let's say a big round of applause to this esteemed panel. They have really done justice to each of the questions. I think we can. Let's, yeah. Come together for picture. We can come together.
Thank you very much to our first panel of the day for doing justice to the topic on navigating uncertainty and expanding access in the insurance sector. Thank you very much to our great panelists as well as our moderator as well. Once again, please put your hands together for the first panel. As we move on, we will be having another presentation, a very brief presentation on resilience and growth, identifying the alternatives in insurance. And this presentation will be taken by Mr. Aminu Tukur, the Vice Chairman of Nor Takaful Insurance Limited. Please put your hands together for him as he comes up for this presentation. Thank you very much.
Good afternoon, ladies and gentlemen. It is a pleasure and honor to stand here before practitioners, regulators, and people who have interest in the insurance industry. I'm just going to wait for the slides to come up. All right. My presentation is brief. I know they gave me 15 minutes, and I plan to remain within that 15 minutes. That is a promise, and that is actually because of the model I practice and operate. If you have a contract, you can't move away from that contract. So if I have 15 minutes, we're going to work within that 15 minutes. So my topic today is based on the theme of today's conference, which is talking about resilience and growth. And what we've tried to do at Nutracaful is looking at the alternatives and providing the necessary alternatives. And that is why the topic here is identifying the alternatives in insurance. Sorry, it's okay. So, in setting the context for my presentation for today, I think several people have said it today. We're less than 1%, we're around 1% in market penetration. This is a challenge we have been facing over the years. This 1%, we hear it all the time. What are we going to do about it? However, the representative of the Commissioner for Insurance mentioned that it's bigger than 1%. Why is it bigger than 1%? Because we have the very local way of doing things. Our insurance is my mother at home, my brother who is living abroad. If I get into trouble, if I lose an asset, if I lose something, I run back to them. So we have this very informal form of insurance, just like we have a very big informal sector in Nigeria in terms of the economy. So we have to find a way of capturing all of this informal insurance, which are the alternatives that have always existed. Then, of course, the demand for protection solution is also rising. People are requiring more and more. Today, we've talked, in the earlier panel, they talked about partnerships and banker assurance. Why is banker assurance big? Because the biggest people that want insurance today or force insurance, apart from the compulsory insurance, are banks. They're not going to lend money to you if the asset is not covered. They're not going to lend money to you if your life is not covered. So in case of death or anything happened to you, they're not going to start chasing anything. They say, look, there's credit life. Let's go after the credit insurance on it, and we recoup our money. So, as I've stated, we now have to look at alternatives more and more, looking at how we're going to bring in the alternatives, work with the regulator, work with the practitioners, work with individuals within the system. Again, the Nigerian alternative, first of all, is no alternative. There is God. Okay? It is the first thing. The average Nigerian is there is God. Okay? And we all know there is God. On the Islamic side, what we keep on saying is, look, trust, put your faith in God in whatever you do. But then there's always a hadith that we always say, and hadith is the saying and ways of the Prophet Muhammad, peace be upon him. And it says, who told us to first tie your camel? Tie your camel meaning somebody went to see the Prophet and said to him, look, the Prophet said to him, why haven't you tied your camel? He said, look, the Prophet, you're the Prophet of God. Don't you tell us to put 100% faith in God and trust in him? And he says, yes, put it, but first tie your camel. So Islam has always been encouraging ways to protect yourself. Islam has always protected and said, look, let's put insurance into place. And it has always been there. Insurance has always been there. And the Nigerian way has always, apart from, we've spoken about betting. The younger people, the people in the lower cadre today, rather than put money in insurance, they're going into betting. You'll be amazed at the size of the betting industry in Nigeria. It is far, far, far bigger than the insurance industry. I don't want to imagine the figures, but I was told the figures about a year ago, and I was actually amazed at how much betting industry gets. In the last 2-3 days, there's this CBEX. Is it CBEX? China something. I didn't know much about it. But it is estimated that 1.3 trillion has been lost. And I can bet you a significant amount of that money should have actually come into the insurance industry. So we need to find a way of bringing that alternative into this industry. Then there are the people that I don't need insurance. I can afford replacement. I know a relative number of rich people who say, why do I need to insure my 80 million car or 100 million car? I'll just do third party. If nothing happens to it, I can afford to replace it. Okay, and they can. They truly can afford that. But then we have to realize sometimes these assets become bigger than us and we need to start to protect them. Then of course, there's the self-insurance. I'm sure insurance practitioners here, when NICOM enforced the 5%, they lost a lot of businesses, especially from the corporates who used to do comprehensive insurance. And they said, we're not going to pay 5%. What we'll rather do is do third party, then put some funds aside. And let's do a sinking fund. We'll manage that sinking fund. If anything happens, we'll take from the sinking fund. So these are the alternatives that exist. These are the alternatives that they're practicing over the years. I'm talking about resilience today. What is the resilience in the insurance industry? The ability to absorb all these losses, the ability to absorb shocks, disruptions, and so on. A few years ago, the Nigerian insurance industry, had a shock, and that was during NSAS. It was quite bad. I don't have the figures, but then there were a lot of claims, the damages on Lekki, Surulere, the buses, and so on, across the country. And I believe there was a mandate, and the insurance companies decided, you know what, even without the RCC, we're going to come in and provide cover. And you have to give it to the Nigerian insurance operators at that point in time. They met and paid a lot of claims. Now, the resilience and to accept this shock today is what NICOM is trying to do through risk-based supervision and capital to ensure that, look, every insurance company has adequate capital, has adequate reserves to cover in terms of big shocks. And that is why they're saying, look, we're going to do, based on the act that is being about to be signed, we're doing 25 billion. However, 25 billion is just the minimum. We're going to go and look at risk base, and we're going to continuously check those risk base. So the Nigerian economy has suffered a lot in terms of inflation, foreign exchange, insecurity. Today, if you open the newspapers, there's so many things about fights going on in various parts of the country. So how do we as an industry prepare ourselves to ensure that we're resilient enough? I know we in the Takaful space continuously do that. I know the conventional or traditional insurance companies are all looking at ways and areas in which they can do that. Now the question is, why are alternatives necessary? Why do alternatives matter? One, conventional insurance has not fully reached the grassroots. It's something we have to accept. Earlier on, we spoke about, look, we're all going for the corporates, the big ones, the internationals, the oil companies. When Dangote was going to come, everybody wants Dangote. You want the BOA, you want the so on. So everybody is focusing on the big ones. If I ask in this room today, how many people have OPay accounts or Money Point accounts? Very, very few of us will put our hands up, because we're all with the traditional banks. We all look at, you know what, OPay is not for me. It's for my security man. OPay is for my driver. And that is what you look at. The banks today, the traditional banks today, are meeting the requirements of the corporates. They're meeting the requirements of the big people, the HNIs. Meanwhile, OPay, if you look at the valuations of OPay, they're looking very good. The amount of money, how many POSs do you use today that are Money Point? How many are Guarantee Trust Bank? How many are Providus? You can see some people are now thinking, they're like, you know what, we're going to get into the grassroots. And that's what we need to do in the insurance aspect. We need to get into the grassroots. There's also that trust deficit. I grew up believing that insurance companies don't pay. Okay, and unfortunately, that is changing. However, there's also this thing. I've interviewed a number of claims officers, and I'm sorry to say this, my experience with them is, when I ask them a question, what is your approach, what is your attitude to claim? They'll tell you 90% of the time, every claim is fraudulent unless proven otherwise. And it's just a sad way of approaching things. It should be vice versa. It should be every claim is genuine unless proven otherwise. And that is one of why the alternative of the Takaful model speaks totally different. The approach is a mindset. You have to treat everything positive unless proven otherwise. Then of course there's the religious sensitivity, the cost barriers. Insurance can be viewed to be very expensive. Okay? The man who is selling vegetables on the streets cannot afford to pay 100,000 naira in terms of premium, but he can afford to pay 500 naira every week. You know, so these are the things that have not allowed us to get into the grassroots. These are the things that, some of the barriers that we have created within ourselves, and so on. We look at Takaful giving us ethical alternatives that aligns with local values. Then InsurTech. InsurTech are coming up. We cannot ignore them. Like I've said, the banks at some point in time ignored the fintechs. And the fintechs today are giving them a run for the money. If we do that in the insurance industry, we will wake up one day and then the InsurTechs have taken all our markets. So we need to find ways to work and partner with the InsurTechs. We shouldn't look at them as competition. We should look at them as partners. So again, I'm not going to focus too much on this. apart from the insurtechs, you have the aggregators who basically bring insurance companies together. Oh, okay. I'm sorry. So, what is takaful? Takaful is derived from an Arabic word, kafala. Kafala meaning mutual cooperation. All of us in this room coming together, pulling our resources in one pool and saying, look, if anything happens to any one of us, we'll take care of the other person. Takaful means somebody is going to manage those resources, and then the responsibility of administering it lies with that person. But that person who is holding those assets in trust does not own the assets. The assets remain the property of the people sitting or who have contributed in this room. And that is why it is the model of risk sharing as against risk transfer. The conventional has risk transfer. You pay a premium to the insurance company, they carry your risk. If nothing happens, the insurance company keeps the premium and whatever. I'm just trying to explain it in very basic terms. Under the takaful model, you pay the money or contribute or donate the money into a pool. The takaful operator is only managing that. He's not managing the risk, he's overseeing it. If anything happens, and at the end of the year, he gets back to the participants and say, look, I have collected ₦1 billion in contributions. We don't call it premium. Out of that, I have paid claims of 30 million. I have paid retakaful or reinsurance. I have paid your NICOM levy. I have done this, and there's a surplus. And within this surplus, I'll be able to distribute surplus to the participants who have not made a claim. And this has proven to work. It has proven to work globally. It has also proven to work in Nigeria today. In the last 7 years, the takaful operators have distributed over 700 million back to participants who have not made claims over the years. So, takaful as resilient, we say it's ethical. I'm not saying conventional or traditional are not ethical. It's just that the basis and the foundation of running a takaful company is based on ethical values. It's inclusive, appeals to the undeserved. It's sustainable, encourages surplus. And the sustainability here is people keep on saying, every year I pay a premium, I don't make a claim, I don't make a claim. What do I get back? And you know what? I've not even made a claim for 5 years. I've not gotten anything back. All right, so let me even stop. Hopefully God will continue to protect me and my assets, and I wouldn't make it. But in the event that on an annual basis you get back a surplus, it encourages you to say, you know what, I'm even getting part of my premium back. Let me put back that as my contribution or my premium into that. And we've seen that as an operator, we've seen that continuously, whereby people keep on coming back to us and they say, oh, you know what, keep my surplus for me. And we're like, no, we have to pay back. We're required by our regulator to ensure that we pay back this money to you. It's not a no-claim discount. It is actually cash back that you need to receive on an annual basis. It's more transparent, and we keep on saying this. We don't have small prints. All our prints our policy documents are actually in big print. It has to be very clear, and we try and force you to read it as much as possible. So, growth opportunities, again, partnerships with digital platforms, the insurtechs, partnerships with cooperatives, SMEs, integrating with the health, agri sectors. Challenges to overcome, there needs to be more clarity on this. We need to make sure that people understand this. We need to get more support from our regulator, and we have gotten a lot of support actually from our regulator. Since 2013, when the guidelines were produced or issued, we've gotten more and more support. But I think there's a lot of capacity issue from the regulatory side, from the operator side, from the industry side as a whole. We have worked and partnered with the College of Insurance. We've also had various conversations with the college, with CIN in terms of that. We need to more awareness and financial literacy. Product innovations. I keep on telling people we shouldn't be looking at insurance as a product-driven industry. what we should be looking at more of is solutions. Because we find that a lot of times we sell products, and we force people into these products. What we need to do is more looking at it towards a solution based. And I know it's probably part of from the regulatory system. Oh, bring your products, let us approve your products. So we're forced to sell products rather than solutions. And you know what's going to happen? The insurtechs are going to come with these solutions. They're going to have combination of products and then provide you with one. You make one premium and so on. Funding, we need to put more funding and increase our capacities. Now, no Takaful, I'll just speak a little about it. We're an 8-year company. Today we will have about 60% of the Takaful market. Last year we underwrote about 10 billion naira in terms of premium or contribution compared to when we started in 2017 with about 200 million. So our business has significantly grown. And what we've been able to do with our business is we have seen that we've brought in a lot of people who are not in the insurance space, who never wanted to do insurance, so they've been able to capture that. And we're fortunate enough to also have developed our own HMO. Like I've stated, milestones. Today, the Takaful market is between 1% to 2% of the whole insurance industry. So we're still very small in the whole industry. I know when the bigger insurance companies say, what are you bringing to the table? Yes, we're between 1% to 2%, but I keep on saying, watch the space. It's going to get bigger and bigger and bigger. Charting the path forward. So we have to embrace models like Takaful, like InsurTech. We have to invest in resilience-focused insurance innovations, align with insurance solutions with cultural and religious belief, collaborate across sectors to deepen penetration. In conclusion, Takaful is empowering participants, and we see it. We've been able to align with the Gen Zs, with the younger people, because they want more control, they want more influence, they want everything. They say, look, I want to know more and more and more. Again, they also want to be able to do things quickly. So we've been trying to do that and align ourselves properly and so on. And because, again, now more than ever, people want more equity. The surplus that we gave, it's more of, you know what, I'm participating in it, I'm managing my risk. If I manage my risk properly, I won't have to make a claim, so I have more control and so on. So on final thoughts, insurance must evolve with the times. In uncertainty, alternatives like Takaful can offer resilience and growth. Let's chart a more inclusive, ethical, and sustainable insurance future for Nigeria. Thank you very much.
Thank you very much. Thank you very much to the Vice Chairman of No Takaful Insurance for that brilliant presentation. Like he said, hopefully God will protect our assets and our, but please, let's just buy insurance and not stress God. All right. We are going to our second and final panel right now, and this panel is focused on innovations driving growth and resilience in the Nigerian insurance sector. But before that, I would like to just recognize some of these people present here today. Like I said earlier, every single person here is very important, but we would like to recognize the presence of Dr. Adaobi Unwakuche, the MD of Veritas Capital Assurance, as well as Olumide Ibidapo, the MD of First Insurance Brokers Limited, as well as Akinjide Orimolade, the MD of Stanbic IBTC Insurance, as well as you all are very distinguished guests today. So on this panel, we have the Managing Director and CEO of Sunu Assurance PLC, Mr. Samuel Ogodu. Please make him feel welcome as he comes up. He's a chartered insurer and a distinguished member of the Society of Fellows of the Chartered Insurance Institute of Nigeria, with a notable career in the management and growth of insurance companies. He began his professional journey with Nigerian Life and Pension Consultant consultant before joining Law Union and Rock Insurance PLC. In 1987, as the senior manager and head of the special risk department. In 1994, he also played a foundational role in establishing Sovereign Trust Insurance PLC, where he rose to the position of executive director and chief operating officer due to his dedication and strategic impact. He is renowned for his expertise in turnaround management and has led several successful project committees. Please, distinguished ladies and gentlemen, please make welcome Mr. Samuel O. Ogbodu, the Managing Director and CEO of Sunu Assurance Nigeria Limited. But I understand that he is represented by is represented today by the Mr. Rotimi Siwoku, the head of strategy at Sunu Assurances Nigeria PLC. So that's Mr. Rotimi Siwoku. Also joining us on this panel is another very brilliant individual joining us on this panel. And I would like you all to please, just as we've been doing from the start of this conference, please let's be making the applauses a lot louder because it's not easy for them. They made it here today and we're really grateful for them. So joining us on this panel is Ms. Adebowale Banjo, the CEO and co-founder of mycover.ai. Mr. Adebowale Banjo is the CEO and co-founder of mycover.ai, a trailblazing insurtech platform transforming insurance access in Africa. He's a seasoned executive and excels in business development, strategy and product development and business analysis with a proven track record of scaling sales, profits and operational efficiency across startups and growth stage organizations. Distinguished guests, ladies and gentlemen, please make welcome Mr. Adebowale Banjo, the co-founder of mycover.ai. Also joining us on this panel is another brilliant individual. She's a seasoned actuary with over 20 years of experience in the insurance industry, and she's the head of life underwriting at Leadway, where she oversees risk assessment, underwriting strategies, and policy development. She's a fellow of the Institute and Faculty of Actuaries in the UK. She has extensive expertise in actuarial modeling, product development, and data-driven risk evaluation. She continues to play key roles in refining underwriting processes to align with evolving industry regulations and customer needs. Distinguished guests, ladies and gentlemen, please make welcome Rosetta Ayete, the head of life underwriting at Leadway Assurance PLC. And also joining us on this panel, last but definitely not the least on this panel, is a dynamic executive who merges financial expertise with impactful leadership. At Custodian Life Assurance, he manages over 10 billion naira in pension and annuity assets, driving value across Custodian Investment PLC. He has strength in financial strategy, risk management, and tax-efficient advisory. He also has trained 1,550 plus professionals as a certified JCI trainer. Are there JCI people in the house today? Please put your hands together for Mr. Terry Ferdinand, the unit manager at Custodian Life Assurance Limited. Thank you very much. All right. Okay. Please forgive me. To moderate this panel is Mr. Ayokunle Olubumi, the head of financial institutions ratings at Agosto and Co. Please make the applause very loud because I almost left him out.
Good afternoon, everybody. Good afternoon, panelists. So, as earlier mentioned, this panel will be focusing on innovation, try to manage innovation, disruption, and changes. Like we all know as individuals and businesses, the only thing constant is change. And for us to adapt to changes, we need to actually what? Innovate. So I think I will start with you, Rotimi. Right? Sono, you've been around for a long while. If I'm correct, it's like more than 4 decades. And I also, you'll be answering 2 questions into one because of our time. And also Sono Group, you're also in a lot of countries. 17, if I'm correct. So my question to you, my first question to you is this. How have you been able to align and change your strategy to cope with the changes and the trend that you are seeing in the environment? That's the first one. Then also, as Sono Group, we are also very strong in the Francophone countries. So what lessons can we also learn from those markets in Nigeria?
Good afternoon, all, and thank you for having me. With regards to Suno has been around for quite a while, and we all are aware that the Suno came into Nigeria, I think in 2018 or thereabouts. But before then, they've been in other Francophone countries. And the brief history about Suno, even those Francophone countries, we are quite related to the Axel brand in those Francophone countries. So when there's a divestment in the region, Sono took over. So coming back to Nigeria here, one strategy we actually adopted in Nigeria was to leverage technology as a whole coming into Nigeria. We are not in the habit of actually scaling up operations fast. We try to introduce in technology first of all, modify it into scale it up into efficient underwriting and also service delivery. This speaks well into our operations in Nigeria. If you notice, the staff strength is not so much. However, we are actually introducing new technology, looking at the web-based solutions, because we noticed something. Everybody always go for the mobile apps. How many people want to download your mobile apps? How often do you reach out to them? So rather than leverage on that mobile app, we introduce web-based application. And this paid off when the NSAS incident came up. Our operations, because they were web-based, we were able to actually work remotely and we were able to transition without affecting any of our customer service delivery. So with this in mind, when we saw the lesson in Nigeria, we introduced other solutions as well for the sales and also the pre-loss inspection, which we're still learning from. I heard there was a question regarding the remote inspection. This, the adoption strategy replicated by the earlier panelist, which is piloting it in-house first before selling out to, giving out to the customers. We are adopting the same strategy. However, we've also learned from the solutions in the market and new modification. But what we observed again was that we had several solutions in different locations. It would have been nice if the regulators harmonize the solution and the industry can actually have access. Because today, when you want to actually regulate your, renew your vehicle license, you have to do vehicle inspection. That database of the inspection report is there. Nobody's announcing it. Today we do a lot of KYC regulation. Why do we have to do KYC upon KYC when you're changing the insurance company? Why can't we harmonize it? The banking industry have shown us. NIM is available. Can't we harmonize those records there? And we pick from those information so that the onboarding of most customers can be made a lot easier. These are things that are readily available. But harmonization of these solutions is really not there. That's what we've seen. And luckily, I was actually part of a committee that might make some recommendations to the regulators. And these are things that we're looking at. Even beyond the services of the underwriter, the service providers, we are leaving them out. When you want to offer service to customers, when the claim crystallizes, how do you manage it? The loss adjusters, are they online? Those are things that we need to really look at. And there are solutions they are really available for us to actually leverage on. And this speaks to a little of what Sono is already doing in the market. And Francophone region, simplification of policy documents, we are leveraging on that as well, because there are learnings from that market. We learn from them, they also learn from us, because there are solutions that are available there that might not work here, but there are some solutions here. USSD for the like USSD, it works perfectly in Ghana. We tried it here, but it wasn't really successful. But the Ghana leverage on it, they generate about 60% of their revenue from the same USSD solution that was launched here in Nigeria. So these are small learnings that we've.
Thank you very much, Rotimi. Thank you very much. I think it's obvious that digital is actually the way to go. Okay, my next question will be for you, Adipawali. All right. As an API-based insurance product that you guys are selling, what challenges did you face trying to even integrate it into businesses and even trying to even collaborate with the traditional insurers? That's the first question. The secondly, are there some regulatory changes that you actually think that InsurTech needs? Because like we all do in this country, we need InsurTech to be able to catalyze and even improve our insurance penetration. Right, can you answer that? Thank you.
Okay, thank you. Good afternoon, everyone. So in terms of challenges, I think at the beginning, the challenges were around the readiness of the traditional insurance companies. So what we found was a mix where some bigger insurance companies were a bit more advanced in their readiness for API integration, in the infrastructure that they had set up, while some of them were a bit behind. But in every challenge is an opportunity, and what that did for us was it enabled us to sort of rethink how we build our infrastructure. So the way our solution is structured now is such that regardless of where you are in your infrastructure journey as a company, right, we're able to serve you. So whether you have robust infrastructure or you don't even have any infrastructure at all, right, we're able to do that. But one thing I must say is that I don't think that from the traditional insurance companies themselves that we had challenges, right? Because they wanted to move, they wanted to do it. Maybe they just didn't have enough from a tech perspective. But working with us then gives them that leverage to be able to do so. And on the distribution side of things, as the customers that then use the API, I think for us from the get-go, we had looked at building things that were simple to use, right? Things that were, in fact, we have a low-code tool where you don't even have to do any tech, right? It's just copy a link and paste. And that link in itself is dynamic to onboard a customer, to manage the customer, for the customer to claim and do everything you would typically do on your website just on a link, right? So that's the power of technology, to be able to build things that are, powerful but simple, and that's how we've structured that. With regards to the regulator, I think that recently we've seen a lot of traction from the regulator, right? There's the sandbox, there's the InsurTech guideline that is being worked on. So I think there's some effort in that regard. And the interesting thing that I've found is this time around, they've carried us along, right? So there have been conversations, I've been part of workshops, I've reviewed the drafts, right? So the initial things that were done without us. And clearly the problem that poses is you do not understand the players in the market, you do not understand what they are trying to solve and the pain points that they have. But by bringing us on this journey, it's a lot easier to understand our position. And I would say that what we've seen so far is encouraging, maybe a little bit more speed, just to ensure that we get there a lot faster. But I think in the general positioning of the regulator at this moment is quite encouraging.
Thank you. Thank you, Deborah. Rosetta, let's talk a bit about Leadway. Right?
Okay.
And risk underwriting. Now, how are you integrating climate data and predictive analysis into your underwriting framework, particularly for high-risk sectors such as agri and logistics? Then if you can combine that with another question, which is how do you design policies for involving risk? Same thing like cyber risk, health pandemics, right? I know that's a big one, right?
All right, thank you, and good afternoon, everyone.
Yeah.
I'll probably take the first one. So we're doing quite a lot with climate data. And if I start off with the area of agriculture, for instance, we have partnered with some climate techs. We've also partnered with some agronomic data platforms. And what that means is that we are able to ingest data from there into models. So typically we can have things like in real time, you can have satellite imagery. We can have access to soil moisture sensors. And actually, crucially, one of the things that has been very useful will be having hyper-localized weather patterns. What that means is that it also helps us to build models that are quite detailed, and so we can then do predictive analysis off the back of that. It's not me who does that. I have there's a team of very brilliant people, and it's really encouraging to see the work that they do. So they've been able to develop parametric insurance policies, and I must say that it's been really impactful. The focus has been on small-scale farmers. And so with parametric insurance, once we set the parameters, once that is breached, we are then able to have very seamless claim payouts. The thing is, are we there? Not quite there yet, because the volume of data will be very helpful. The other thing is the quality of the data, but we are working towards it. And I know quite a few people have said that pulling off data will be useful, and I think I want to highlight that as well. To go to your next question, which is on, I think, cyber you mentioned, maybe I'll start off from where I ended off data. So that's the starting point for any product development. Now, for things like cyber or typical emerging risk, you do need some kind of expertise. Now, the challenges that we are facing is that we don't have the volume of data, and that's probably where reinsurers will come in. Now, for reinsurance, they will probably act in two different ways. One will be to give us data, because you'd find that reinsurers typically will have other underwriters that they work for, or be exposed to other regions and other countries who may have cyber ongoing. The challenge we're having locally, though, is that, of course, the reinsurers are asking for a lot of detail that the industry is not ready to give. So we are struggling there a bit, because then affordability is a thing. So it's almost catch-22. Which one comes first? Do you do the affordable product, get more people in, gather the data, and then eventually have cheaper products? Or what do you do? I think that we really need to get to the point where we build local capacity. We do really need our reinsurers to maybe step up. We need to take matters into our own hands and sort of build the capacity. I mean, everybody here, so I think other players here will have data. So let's pool that information and improve the trust, because I think cyber is very sensitive and most people are not comfortable, but let's build on that. All right, thank you.
Thank you. So that means we're back to where Rotimi started from. Let's collaborate, get the data, and share it across industry players. Okay, sir, I think my question for you will be with regards to collaboration with brokers, right? The first one will be that, do you think they are utilizing technology in even trying to generate businesses, right? Are they adopting technology enough? And then also, in what other ways do you think there can be more collaboration between the brokers and the traditional insurance companies?
All right. Good afternoon, everyone. Thank you for the question. All right. So one of the key things that's very, very crucial to also highlight is that we'll need to see brokers becoming more dynamic in the way they approach the business, rather than operate as though as a one-shop business venture. And that means you're rethinking your business model, you're rethinking just going within the traditional space and widening that gap towards who you offer. And if you look at the business model brokers would likely adopt. It's a B2B model. You don't have that B2C or D2C model that takes them towards directly to the customer or interface with the customer directly. And that's, we need to highlight some of the things most of the previous speakers have mentioned today. We need to move away from just looking at the big picture of the big check and move towards the numbers and see how we can generate those numbers at a faster rate in terms of how fast we can get those premiums from the underserved populace, include more inclusivity into that.
Thank you very much. Rotimi, I'm back to you. Of course, I have two questions, two in one, because of our time, right? Over the last 3 years, we've seen significant growth with Suno Assurances, right? I think your insurance revenue, you've crossed the 10 billion mark, right? From about 5 trillion, I'm sorry, how am I saying trillion? 5 billion that you had 3 years ago, right? So the question is, what are the things, what are the innovations, what are the things that you've actually even incorporated, right? Even in generating business and also in claims management over the last 3 years that have helped you. Like you mentioned, 2020 was a watershed in the industry, right? With NSAS and also COVID. That's on the one hand. Then also, from what we've seen in the banking industry, collaboration in fintech is good, but it had its own downside in terms of compliances and what have you. How do you think insurance company can actually collaborate with InsurTech, Adibowale's people, without losing sight of compliance and all the other issues?
Okay, thank you. With regards to Suno Assurances, over the last few years, while doing the transformation, managing the change from equity to Suno, we had to really reclassify most of our products, the profit drivers, the investment drivers, and actually based on that, we further broke down the investment drivers to those in Naira denomination and also those in dollar. With that, we now use that to actually see those that will drive the investable funds, while the ones that will drive operations to make sure that we have less than 100% combined ratios, and also the ones that will drive the customer base. The personal line businesses, though, after classifying all this, we're able to actually scale up. We noticed that there were gaps in operations. We leveraged technology to actually do that. The ones that actually, the ones that give so much pressure on the back office operations was the motor class of business. We introduced some web-based application to that. We also position ourselves by bringing in APIs. Because we noticed that beyond just customers going on the website to buy insurance, we need to position ourselves that when the brokers have their own in-house application, we're able to integrate into their in-house application without having to stress ourselves or stress the back office. With that, we're able to scale up the customers and actually provide service delivery. Then also, we also introduced some other products as well from the angle of marine cargo and the likes. We did that beyond just the broker itself. We noticed that solutions we have online actually cash-based when you have sales, but the brokers will give you credit notes. We factor that in as well, so that we're able to actually move with them, grow with them. So this was embraced by most of our partners, and that actually helped us to scale. That was for the technical side. For the claims side, we went beyond. Before going into automation, we have to do a lot of prescriptive analysis in-house to really demystify where the issues are, where the gaps are. And with that in mind, we've actually itemized some of the solutions that we're actually going to the market with. However, knowing fully well that the market is broker-driven, we have to be careful how we approach the market in that regards. But there are solutions already in pipeline that we're trying to use to hit the market to manage service delivery. These are things that we're looking at. And I earlier mentioned that we did a pre-loss survey, the remote inspection. This speaks when you have a customer that is far away. We don't have brick and mortar office there. Without agents there, we can still service the customer without really being there. So that aside, you mentioned integration with how we can leverage the InsurTechs.
Yes,
so
exactly.
Some of the challenges we've observed while doing some of these projects has been issue of compliance. Once you introduce compliance right from the beginning, and all the expectations of the regulators regarding the product you're about to design or the solution you're about to design, then it gives a clearer picture of how the project is going to be executed. If you leave these out and you design the product, then you run into challenges regarding compliance issues, because once that is itemized, and also you have your compliance team on board as well, you sell the idea to them, and I believe you, the NICOM regulators have some officers that you can easily call to get their feelers on how they perceive a particular product you're thinking. They might tell you some of the market challenges that you might try to, you should avoid while developing your product. So with this partnership, it will be a lot easier when you have a tripartite discussion before launching any solution into the market, leveraging InsurTech. If you lose out on this, you might have challenges getting approval at the end with the regulators. That is one key thing I've observed in most of the products I've handled.
Thank you very much. Thank you, Rotimi. Adebowale, let's look at my cover's approach. My cover here is approach, right? We know that you try and even emphasize simplicity. So the first question is, how are you able to do that, emphasizing simplicity while ensuring that the products are effective in underwriting risk? That's the first side. Then the second side, can you also talk a bit more on how your products have been able to help the underserved markets, help in financial inclusion, particularly in your collaboration with micro insurance and the underserved market?
Okay. Thank you. So on the simplicity side, I think it speaks more to the end user, right? A number of speakers have talked about, when he was presenting, he talked about alternatives. And what I have found is the average Nigerian does not understand insurance like a practitioner does. And the practitioner goes across to that Nigerian trying to explain insurance from his perspective. And that leaves a gap. Right, so we have all these fancy words and terms that these people do not understand, right? And one of the things we try to do is, how do I take this information that the underwriter wants to communicate to this person and simplify it? Some of the things we notice, so for instance, I'll give you like maybe 2 examples. You find maybe in auto insurance, right? There's excess, deductibles, and all those kind of things. And then someone just sold him car insurance, he just bought car insurance. Then he has a claim. They say it's 500,000 naira. Insurance company says, I'm paying you 450. He says, why? They say deductibles. What's that? All right? So what it feels like is you're trying to cheat him. Now, it's even more challenging when you did not tell him beforehand. Right, so if you could reference, I shared this with you, I might, okay, I didn't understand it, but at least you told me. So areas like that, right? Health insurance, pre-existing conditions are not covered. Then the mama in one remote place that you sold to, who already has BP by the time she bought your plan, goes to the hospital and they say, no, we can't treat you because it's not covered. She doesn't understand the nuances, right? And what that means is she's going to be upset. You sold her a lie, you promised and you didn't fulfill. So the question is, can we make this thing understandable for the end user, right? So if there's, for instance, all our auto policies that we distribute come with excess buyback by default, because I don't want to explain what a deductible is, right? So even if it means that, because you try to explain to a lot of people, but they still don't get it. There's then the betterment part and all of the other things, right? So it's one. From an understanding perspective, try and simplify the concept, right? 2, and maybe before I even move on from that, is even in communication. So we have, as much as we're a tech company, I think it was Rashida that talked about Digital while she was here. Yeah. We understand that we are in a market that requires a touch point. And a lot of times, tech cannot deliver that touch point, so you need humans, right? So in our communication, we try to be granular as we possibly can and speak in the language that the audience understands. Then the second thing is around usage. So I had mentioned our infrastructure. You talked about mobile apps, right? So for instance, with the claims inspection, right? When we're going to build that infrastructure, one of the things people say, let's build an app. So when you want to claim, you download, you use your app. But how many apps would people possibly download? And of all apps to download, an insurance app, that's not happening. Right? It's not happening. So the question is, how do I take you from your traditional website and give you a fully digital experience as if you were using a mobile app without you using a mobile app? That's how you think about the problem, right? And that's the simplicity. So you go to, say, maybe Suno's platform or Leadway's platform, and you click claim. And that link launches what you call a PWA, but it's almost like a mobile app that functions, a web app that functions like a mobile app, right? And everything you would do on the mobile app it gives you that experience. So that's where that simplicity comes in, right? To ensure that the experience that the customer has is one that delights him or her and removes the stress altogether, right? I think that's what I'll say about that. And in terms of collaboration with, you said financial inclusion to, so for me, right, it's about design. Right, so we have a lot of partnerships today, and maybe I give a couple of examples. So there's a partnership we have where people will pick waste, accrue points, and those points are converted to health insurance. And they don't have to buy, they don't have to do anything. They just pick their waste in the normal course of their business, and they have health insurance by default. And what that means is if they are sick, they have their HMO ID on the same app that they use to record the points, right? And they can go to any hospital. So it's designed, right? And we've been able to provide access to a lot of Nigerians who up until that time did not have access to insurance products. And there are many examples like that. Daily contributions. So today you have a large informal sector in Nigeria. People do business and contribute 500 naira, 1,000 naira every day. So out of that 500 naira every day, 100 naira goes to insurance. And with that, you have health insurance, you have life insurance, and personal accident cover and a whole lot of other things. So I think it's designing the products. That's one area we've been able to do. So, and then having the tech to make sure for tracking, for visibility, for data control, and utilization as well. So I think that's what I'll say. Thank you.
Thank you very much. Interesting. Rosetta, we know Leadway is big when it gets to innovation. I was reading earlier today about your pay and harvest agri policies. Can you tell us more about some of your policies, some of your innovative policies that you've introduced to help those at the grassroots? That's one. Then also, briefly, can you give us a case study in which you've been able to combine a traditional insurance product with a, shall I say, tech-driven solution to be able to serve the market?
Thank you. For innovation, you're right, we are big on that, particularly for grassroots. It's something that I'm quite passionate about. And for our ESGs, one of the things that we decided we're going to be quite intentional about. So inclusiveness and accessibility, sustainability was quite key buzzwords that we had. And I heard some other people, I think it was Rashida who mentioned they went to the market. So some of my colleagues went to the market as well. And it was quite fascinating, the things we found there. There are sinking funds there, there are cooperatives there. There's insurance happening. So one of the things that was a good takeaway was, meeting people where they are rather than trying to bring them to formal insurance. And so that has informed some of the products that we've done. So we've done products, some of the feedback was, just give us one peril product. If it's fire, just say fire. If it's accidental damage, give me accidental damage. Don't bundle things up. And so those are some of the products that we have then developed. Another innovative move we've done is probably something that my fellow panelists here spoke about, which is accessibility, frequency of payment. So most people are in the gig economy, informal sector forms the largest population. So making it possible for people to pay weekly, monthly, daily, that has been quite helpful in terms of reaching people. The other thing is I'm making sure that we demystify insurance. So making sure that local language radio stations are carrying out the message and that sort of thing. That's also been key. The other thing that we are looking to tap into, it's work in progress. I think was one of the speakers was talking about money point. If you go to the market, for instance, the POS providers, they are in the market with them. Trust is such a big thing with insurance. So how can we leverage this relationship that currently exists in the marketplace? These providers are already there, they know them. So that's some of the things that we are looking into. In terms of maybe success stories where we've been able to maybe transition a traditional view, I probably would say motor insurance. And I'll give an example. I had a friend who happened to be in a queue where there was an enforcement person there, and she was, going online, hurriedly trying to get insurance, and she called me afterwards. Like, I did it in less than 3 minutes. So I think that is even a success story right there, being able to access motor insurance online. That's definitely key. And I know my colleagues, I think Rashid had also mentioned this pre and post loss.
Yeah.
It's something that Leadway launched a few months ago, maybe a year. We did have the same challenges in terms of adoption, but it's gradual, and I think that the message needs to go out there, because for simple claims, we really should be able to do self-service end-to-end. And so these are some of the things that we are actively looking into to improve. Thank you.
Thank you very much. That's quite interesting. Right. The police stopping you for insurance and quickly just renewing your product, right? Okay, that's fine. Tel, just 2 questions for you, right? The first one has to do with what trends are you seeing now, right, in terms of claims in the underserved segments? Are there trends that you're seeing? Although we all know that during period of macroeconomic downturn, rate of surrenders tends to be too high, but can you just talk about that also? That's the first question. And then the next question has to do with trust. We're talking about how to build trust in the industry, but also from the digital perspective, the trust now would be things like data protection, policy transparency. Since there's nobody to really interpret it for us, what are you doing to build trust with regards to those areas?
All right, awesome. All right, so I have close to a decade experience in this industry, quite a baby to some people. All right, so what I've seen is, let me just speak from the trust and I'll piggyback to. Trust is not exclusive. All right, so when we look at trust, we are looking at cultural fits. We are looking at alignments. We are looking at so many factors that are internal and also external. The first thing that is actually missing is just like I come to meet you and say, hi, my name is Terry, and I will do A, B, and C for you, and I need you to do A, B, and C back. It's transactional, and that's where both our private conversations and other forums have tried to make that education very clear. We need to bridge the gap between not just awareness and take it closer to education. And there's this popular phrase or example usually cited in the social impact space. There was this community that was approached, and it is a fishing community. They were given ITN nets, insect-treated nets, with the hope that those nets would help to treat or prevent malaria. And after a while, going back to do an M&E, and it was discovered those put on those ITN nets to fishing nets. All right, and that says the larger problem or challenge. The people who we want to help. I don't see insurance as an act of selling. It's actually helping people. And they see us sitting on our reclined chairs. We are distant from the problem. And we need the market to start seeing us with proximity to the problem, proximity to their solutions, proximity to their needs. And that's where we need to start bridging that trust. I was just at the airport this morning, and a professor was speaking with me, like, insurance doesn't work in Nigeria, it only works in some other climes, and he's a professor, right? And that speaks to the issue of, he said one thing, you people need to do more education. And I said, I'm going to talk about education today. And so when we take that back and we look at the trends in claims requests, we will see that there's a significant spike. COVID, NSAS, someone speaking about claim payment. I saw somewhere alone during the NSAS mayhem that followed. There were reported to be over 1,000 incidences, and when you break them down into thefts and all of that, you see the total claim payment was in excess of 9.9 billion that the industry paid out. So, and if you look at that, a lot of people don't know that until I go to forums and speak about it. And so we need to also start tooting our horns and putting out those testimonials at different organizations too, and say, okay, this is what we paid out as claim. Put real faces to the claims. I can easily say I paid 22 billion naira. How do I know it was you or my fellow panelists? We need to start putting those claims. And because I work with other young people, I see what some other people do in other spaces, whereby if we make a payment, someone will post it. We go to most of, I'm trying to be very safe here. Almost all of us as practitioners, we go to our space, our testimonial spaces are very, very scant. Very, very scant. So we are not telling the person coming to our website or app or whatever self-service interface that we paid claim to Iya Biliki at Mushi Market. We paid claims to Mohammed. Mohammed was able to send his underprivileged child to university or secondary school. And I'm speaking from personal experience. I know a police officer who has been able to fund her child's education. 3 children, and she's a widow with insurance. But that story never comes out, right? So those are the vital things. I also know someone who is a single mom. She's schooling in an open university in Nigeria. She's paying 3 school fees. And what does she do? She sells Bolly by road, just next to my office. And she's taking this policy. We do not say enough about ourselves. And that's why we see the pushback a lot. And as the economy bites, we're going to have a lot of those claims coming forward because people do not see an alignment between terminating a claim and also terminating their life goals. Thank you.
Thank you very much. I think the industry actually paid more than that. I think 14 billion was the NSAS claims that was paid out. So it was even higher than the. But I agree with you. And that's why I saw one advert of Goodwill on the billboard one day, I think saying that you've done over 100,000. That thing caught my attention. I thought, wow, that's actually good. Thank you very much there. Just for the last set of questions, Rotimi. Like we all know, there are some insurance products that we have them at their infancy. Currently, we can say in Nigeria, agric insurance is still relatively just getting adoption. Even some will say that health insurance is still not pulling its weight. Based on your experience from Nigeria, from other African countries, and even from your original equity assurance experience, how have you been able to balance profitability and even ensuring sustainability, particularly during those early years when those products are not really making profits?
Okay, so with regards to those kind of products, at the infancy stage, the adoption is always quite poor. However, we try to either embed them with a profitable product. When we merge, we package them in a way that the development of those products will be riding on the back of a more profitable product, so they need to actually harness the opportunities and also use that to publicize the new product more. As time goes on, when we see that the demand for the new product is becoming more than what we anticipated, we try to bring it as a standalone. With that in mind, we try to continue the development and also still retain profitability. Those are the adoptions that we've learned from even the Francophone region. We try not to start a new product as a standalone. We try to embed them with existing profitable products. So that's the first market entry strategy from Suno's standpoint.
Thank you very much. Adibowale, if we look at insurtech in Nigeria, it's still relatively small compared to the fintechs, right? Those ones are providing tech payment solutions and even asset management. What are the things that we can do to ensure that, to help those insurtech to scale up? Because whether we like it or yes, in the industry we need insurtechs. What can we do to help them scale up, to be able to attract enough capital, right, like those that we have in the fintech space?
Wow. Okay, I think I'll focus on macros here, right? You can't outgrow your economy. Right. So if you look at the insurance industry as a whole, it's one that still needs to grow. When you look at fintech, so I was reading an article where Fair Money, the fintech app, did about 129 billion in revenue last year, right? That's what some big insurance companies do. Right, so the size of the financial market, talking banks and payments now, is a lot. When you factor remittances, settlements, transfers, and all of that, it's a lot. But having said that, I think it's a question of understanding the role that insurtech plays and will play in this market. So when you look at the demography today, majority of Nigerians are young. Majority of Africans are young. Africa has the youngest population in the world. And what that means is that we as an industry need to start positioning for the future. That future that involves a young, dynamic, digital, exposed individual who wants control, who wants visibility. And those are the things that insurtech bring to the space. I think there's also a sense of responsibility, one that I personally carry, where insurtechs also have to show some form of results that would attract funding right into the market. I know, for instance, when we raised our round, it took a lot to even convince people that insurance was a viable channel in Africa, talk more Nigeria, right? But I think because we had gotten some traction before we went to market, we had done some partnerships, we had onboarded some customers, it was easy to show some kind of track record to say, look, we've done this, fully, funded by ourselves, and now we just need capital to scale it. So I think there's a lot that needs to be done, first by the industry, and then secondly by those who are championing this insurtech cause to try and show some traction that would encourage investment. Thank you.
Thank you very much. I think we just take the last question from you, Rosie. I think it's very important, this question, so that's why I'm actually even saying that we should take that one. And like Madibo Ali mentioned, the environment is changing, the insurance needs of the population is changing. What are the revolution or the changes that we think we need to have in the industry in terms of underwriting to ensure that we're meeting the insurance needs of the populace?
Okay, thank you very much for that question, and I'm quite passionate about that question. So, from an underwriting point of view, I sit in the life space, and some of the problems that or pushbacks we get, form fillings. You're giving me too many forms, and I think my fellow panelists mentioned about doing KYC everywhere you go. And I think we are beginning to leverage on the information that we have now. So we have APIs for BVNs, NINs, and Leadway, we've started taking advantage of that, feed into API, get the information. And it's making a difference, because sometimes you have a member of staff sitting there doing QC, and you're thinking, if I can get this information from a government database, this is trustworthy. Of course, sometimes addresses may change, but even the level of QC you do there will be relatively small. So I think taking advantage of what's out there. So API for KYC, we can definitely digitize that. The other pushback is on medicals, for instance. So some of the initiatives we are trying to do, and it's still work in progress, where getting access to medical data. So imagine this scenario: you are filling out a form, it's pre-populated with information that we've spooled from, let's say, NIN database. As you're putting your information through, you have a few questions, and it's actually pulling information from your doctor's office. We already have it there. And with this information, there is a pricing model that is sitting there, and it's looking at data that we probably get from a collated data pool from all underwriters, and it's giving you an indicative pricing, which is really for you. And so by the time that you get to the point of the premium, you have the best product that has been selected for you. You have a premium that is fair. It has considered quite a few risk factors that, that keeps the insurance company also comfortable. And these are some of the things that we really need to look at. So I think that the future is very bright, and I'll stop there.
Thank you very much. Thank you. I think we are behind schedule, but I think we can accommodate like 2 questions from the audience. Are there questions for our panel? Any question? Okay, I think there's a hand up there. There's a room.
Please, just one question, no parts 1 or 2, please. Thank you.
Thank you very much. Good afternoon, and thank you for a wonderful topic. My name is Christian, all my question is in respect of payment of premiums. There is an uncertainty regarding certain decisions of courts that are observed in practice. That is in respect of payment of premiums through post-dated checks. And the recent decision of the Court of Key has to the extent that post-dated checks do not amount to payment of premiums. And for me, as one that practice sector, it seems a bit discomforting for me to the fact that if I'm giving you a post-dated check, I assume that we have a contract and I should be protected in the event of any of the events that I've been insured under. So I'd like to have some sort of recommendation on how an insured should proceed in this circumstance, particularly as it seems to cause some sort of restraint in persons engaging in insurance business. If there's any recommendation or for the insured to take care of business in such an event. Thank you.
All right. At my company Custodian, one of the practices we've taken up, especially in the retail space, we've ensured that we can liberalize the payments of premiums across several digital platforms, and that ensures we take away the issues of check permanently. And most especially when we're looking at live business, one of the key considerations you want to look at is that principle of no premium, no cover. And then if you give me a post-dated check that I haven't cashed into my account, in principle, I can't really say in earnest that I really owe you so much of an obligation at that point. So standing on that principle, I hope that clarifies that. Do you want to add something?
All right, please, this is the point where we get to thank our panelists and our moderator for doing an excellent job on that panel. Thank you very much. We'll take quick photographs, please. A quick one, the panelists, and then we'll have another photograph with the editor of BusinessDay, the chief sales and marketing officer at BusinessDay, as well as all of our sponsors, representative of all of our sponsors, as well as the DG of NIA and the rector and the representative from the Rector College of Insurance, as well as the MD of First Insurance Brokers and the MD of Stanbic IBTC Insurance. Please get ready. Representatives, please. Okay, they all stepped out. Okay, some are here. Please, quickly. You can leave, please. You can leave. So this is for them. This is for the people I've just mentioned. The editor of Business Day, the chief sales and marketing officer at Business Day, all of our sponsors, as well as the DG of the NIA, and then the representative of the Rector College of Insurance. We're taking it already. All right. All right. I think we're done now with the photograph because we don't have the people that we have actually called out. So please, we can just quickly take this and go back so we can close the event, please. Thank you. Thank you very much. Thank you very much. Thank you very much. All right. We'd like to thank you all for joining us today for the Business Day Insurance Conference. We truly appreciate you. Please, let's take the conversation out of here. Let's take action and let's keep preaching the message of insurance. Thank you all for coming.